the chief guest of the 9th Metro Conference of SIRC, respected, ebullient, enterprising, and an icon of women empowerment, Srimati Kanimoli Karunanidhi, the Honorable Member of Parliament, C.A. Panaraj, Secretary of SIRC, senior members, friends, very good afternoon to all of you. I am feeling so delighted that the SIRC is organizing another major conference straight from 53rd Regional Conference, which was held just about 50 days before, which was grand success and setting a new benchmark and created history in Southern region in all respects. The 53rd Regional Conference was inaugurated by the Honorable Chief Minister of Tamil Nadu, through M.K. Stalin Avargal, and today for the Metro Conference and another prestigious conference of SIRC, it is being inaugurated by the Honorable Member of Parliament, Madam Kanimoli Karunanidhi Avargal. On behalf of SIRC, I am feeling gratified to our chief guest for accepting our request to grace this inaugural session of the 9th Metro Conference of SIRC on behalf of 65,000 members of this entire southern region, extending a very warm and hearty welcome to our chief guest, Madam Kanimoli Karunanidhi, an affable, accessible, and an articulate personality. Welcome you, Madam.
Thank you.
Our chief guest is an embodiment of women empowerment, having risen to become the Member of Parliament and one who articulate her thoughts with authority and conviction through her oratorial skill when it comes to empowering the women in the society. Her skill transcends beyond oratorial skill. Yes, she is extremely and exceedingly conversant as a poet and journalist, with the possess leadership acumen, leading the women's wing of the party and chief of her party's wing for art, literature, and rationalization. She was the member in Rajya Sabha and now an elected representative as a member of Parliament representing Thoothukudi constituency in Tamil Nadu. Her passion for the upliftment of the downtrodden is well known, and her commendable support when the state is faced with the COVID is remarkable, getting her widespread appreciation from the people of her constituency in particular and the people of state in Tamil Nadu in general. Madam, we are highly honored to have your august presence amidst our professional fraternity, and thank you once again for sparing your valuable time, spending with us, and share our thoughts through our inaugural address in spite of your very, very hectic schedule. On behalf of SIRC, I offer our warm welcome to the speaker of the session, Sir Jatin sir. Dear members, you have always been supportive to all our programs that give us strength and vigor. Thank you all for our kind cooperation. On behalf of SIRC, I'm happy to welcome all the participants to this 9th Metro Conference of SIRC ICAI. Thank you so much for this great opportunity. Now, I request our chief guest, Madam Srimati Kanimoli Karunanidhi, Member of Parliament, Thoothukudi constituency, to inaugurate this 9th Metro Conference with her special address. Now, over to you, Madam.
It gives me immense pleasure to be here among the esteemed chartered accountants of the state, and I thank you all for inviting me to this inaugural session. I like to greet the chairperson of the Southern India Regional Council for ICAI, Mr. K. Chalapati, and the secretary, Mr. Panaraja, and other esteemed speakers who are going to be part of the panel today, and all the chartered accountants who participated in this inaugural session. Thank you all for being here. And this 9th Metro Conference of the Chartered Accountants of Southern Region have come together, and it's a very, very important juncture and point, when this meeting is being held, because the economy of this country, due to various reasons, and especially after COVID, we've suffered to losses. Every sector today is facing challenges, and the entire country is looking forward to guidance and support from your esteemed selves, so that they can be guided and they can bring back the economy to what it should be and what it was into the progressive path. So to be among y'all, where everybody is looking up to guidance and support, I'm very happy to be part of this conference. And I also know that for the first time, the Chief Minister of Tamil Nadu has inaugurated your recently held conference, the 53rd Regional Conference of your institution. And when my father, Dr. Kalaignar Karunanidhi, was the Chief Minister of Tamil Nadu, he has been part of the Golden Jubilee celebrations of your institute in 1998. And so, following their footsteps, to be here, part of your inaugural session is a great privilege, and it brings me immense pleasure. I congratulate you and for this being held in Coimbatore, because it is one of our most important places where the development, economic development is concentrated. Like we keep saying that the southern region of Tamil Nadu is still neglected, and after the DMK government and our Chief Minister has taken over, he has laid out a lot of plans to ensure that there is a lot of development in southern part of Tamil Nadu, and they're bringing more projects here. But today, I think the West Zone is very important, and you're holding this meeting there is very, very important too. And I would have liked to be there and meet you all and greet you all in person, but unfortunately, due to COVID, I think we have to do this meeting, and I look forward to another meeting where I can meet you all and would be able to, have an interaction and learn a lot from you all. This is one field, I think, where everybody either is passionately involved, or people are very scared to become chartered accountants, because I've seen many of my classmates also struggling to get through your exams, and some of them being successful, some of them failing miserably and trying again and again. So I know that the best brains and the most hardworking people are there in your profession today. And with that kind of zeal and commitment is the only way where you can support people. And because today the taxing system has become very complicated and intricate also. So without your vigilance and without your support and without you taking care, I think many of the institutions will be in trouble. So it becomes more important, your role in the economy, your role in protecting industry and the business people is becoming more and more important. And I also would like to say that there must be more awareness, especially in two rural areas, where students from rural areas, most of the chartered accountants are from cities, but interior areas, there's a lot of inhibition and fear in the minds of young students, whether they will be able to be successful, whether they can clear their exams. So I'm sure you should reach out to people there, so that they can also get into this profession under your guidance and support. So that because after GST, we see traders, we see small MSMEs struggling to understand taxes and how to deal with it. If we have our own chartered accounts in small towns, more approachable, it would be of great help and comfort to smaller industrialists around the state, and it's a great pleasure, and it is very important that you are a part of nation building. And this first Chartered Accountants Act was passed just after we got our independence in 1949, and there has been, the role of chartered accountants in India has grown by leaps and bounds after that, and women were, hardly a presence at one point. Now those numbers are also growing, and I think around 30% of chartered accountants are women now. But of course, much more, women have to come in. But I think this is a great start for, from 0 to 30% is a giant leap, I would like to say, and it's very heartwarming to see that the numbers are growing and more young women are getting into this profession. I really would like to appreciate you, and I'm very glad to be part of this inaugural session. Your inputs, your guidance is very important for any government, whether it is the union government or the state governments. So your feedback would definitely enrich any budget, any taxing process, any bills in that way, so that there will be a smoother taxing process, and a process which is more practical, and which is possible, because today the tax collecting process itself is sometimes so complicated that we lose out much more than what the government should be getting. With your guidance, with your support, and your advice to the government, definitely we can, the government of India and the state governments can achieve a great deal by ensuring that the taxes are collected from people in the right way, without too many pressures, and in a way so that the economy will also grow and benefit everybody, and more employment opportunities are also created. So your guidance and advice to all the governments are very, very important, and I think in India we should also concentrate about, in many countries, specializations in your profession has become the norm. I think as in all professions these days, if you go to a hospital, there are doctors, like there were days when you walked into a hospital, there was a doctor who took care of everything. Now, if you go into a hospital, there is a specialist for everything. There's if you have a problem in your leg, like there are different 5 different specialities which have to look into it and find out what the problem is. So I think everything is becoming, more specialized, more specific in today's world, and in your profession also, it's becoming more specialized and specific, which is very good. And we need, more young people coming into these specialities, into these specifications, and we have to support our youngsters from Tamil Nadu to come into this profession, because we've always been proud that our people are very, South Indians are very good in maths, and they're have a passion to it. And Indians as such all over the world are celebrated for their acumen in maths and accounts. So I think we have to support our young people and ensure that more of them come into this field in a very comfortably. There's a lot of fear, which I had already mentioned, whether they will be able to do it or not. I think that has to be addressed, and we should bring in more people and encourage more young people to get into industry, into business, to become entrepreneurs also. With the support of people like you and your organization, I'm sure you can encourage more young entrepreneurs to come into business and industry. There is a big void. Either we have huge industries coming in, or very small scale industries which are traditional. New startups and younger people coming in. Still, it's a large gap, and I think the chartered accountants can play a huge role in bridging that gap and ensuring that the economy becomes a place for everybody. Whoever has aspirations, whoever has the passion, the commitment, and who wants to make a difference will be able to make a difference. And I'm sure you can achieve that dream of India becoming one of the leaders in more young people getting into business and leading the path. And once again, I thank you for inviting me, and it's a pleasure to be here among you all and to inaugurate this session. I hope this is a great success, and there are a lot of inputs, and we have messages to take back from it. Thank you.
Thank you so much, madam. Thank you so much. Taken all our inputs, we noted down. Definitely, we will work with the government. We are for the government. Now I request Secretary of SIRC Panaraj sir for the inaugural session.
Madam, we are very humbled. We are very humbled with your presence, madam. We are very humbled, and your guiding and inspiring speech covering so many areas like women, rural, and entrepreneurship. All these things shows how knowledgeable you are. Your poetic and literal language and knowledge also is used here. Being daughter of a doyen in the political field of the country, you have really proved that you are capable of being a great woman power in Tamil Nadu and for the country, and a great model. I was seeing the meaning for Karimoji means very lovable. So you are so lovable for people, and your government always have social justice and inclusive growth as at the heart of the core of the government policies, which is very close to all of us, because we as partners in nation building, we definitely wish to work with the governments, also state governments, and as you rightly guided, we'll follow your guidance, madam. We are very humbled with your presence and are grateful to you. Thank you very much.
Thank you so much. Thank you.
Sir, namaskar, sir. So before handing over the proceedings to you on the topic GST approach to show cause notices and appeals, I take the pleasure of introducing the one and only Jatin Christopher sir from Bengaluru. Jatin Christopher is a chartered accountant, cost accountant, and a law graduate. He qualified in 1996 and specializes in indirect tax laws. He is a resource person for the institute in its various post-qualification programs on indirect taxation, and extends support to ICAI in publication of educational and research material by ICAI on various indirect tax topics. He is also a resource person for the government in conducting training for practitioners, trade, and officers. He has been in practice since 2000 as a partner in JCSS, a full-service firm with a presence across India. With this a brief introduction, I hand over the proceedings to the speaker of eminence, Jatin Christopher sir. Over to you, sir.
Thank you very much, sir. It's indeed a pleasure, a privilege to be on the SIRC platform to share some very urgent message to all our members particularly when it comes to GST, and more specifically when it comes to the question of show cause notices and appeals. Right from our student days, appellate procedures chapter is a topic of choice right from student days. Members spend extensive amount of time practicing and developing mastery over the law relating to compliance, audit, review of financials, and even planning. So therefore, this aspect of notices and appeals is left for later, and if possible, avoided altogether. When we look at show cause notices and appellate procedures in GST, let me start with an inverted structure. Let me start by asking a small question for all of us to consider. How long should I wait before I celebrate a favorable order? Members are all very distraught nowadays that we don't get favorable orders. Almost all orders are adverse. Let's say we do get a favorable order. There is a deputy commissioner who has heard your point of view and he has given you a favorable order. Can you celebrate that order today? Friends, if you look at section 107(2), the law says when there is an order against revenue, then department will go on appeal, and there is 6 months time for the department to carry the matter on appeal to the first appellate authority. Let's say you go to the first appellate authority and the Joint Commissioner Appeals passes a favorable order. The Joint Commissioner Appeals passes a favorable order. Now can you celebrate that, okay, now the issue is resolved, I have a favorable order? Please look at section 108. Section 108 gives power to the commissioner to overturn even an appellate order. An executive authority will sit and examine the validity of an appellate authority's order also, and he will stay the operation of the appellate order. He will substitute with yet another order that will take its place. And the time limit for taking these suo motu revisionary powers is 3 years from the date of passing of the order. So friends, when you get an adverse order, you are going on appeal. When you get a favorable order, department is going on appeal. In appeal, if you get a unfavorable order, you are going to the tribunal. When you get a favorable order in appeal, department will upset the favorable order and make it unfavorable and make you go to the tribunal. So friends, we are all going to meet in the tribunal. Question is, are we ready? Are we ready? We are too busy filling tables, columns, boxes, ticking this, ticking that, 2A, 3B, 2B, 3B, 1, 3B. We are so busy with all this. We are losing the medium-term risk that is staring in our faces. Not long-term risk, medium-term. Just it is around the corner. It's already 4.5 years. It is just around the corner because today there is a explosion of notices. I was talking on one particular issue to an officer in Hyderabad. The officer said, please give me a copy of the order which you are, copy of the notice which you say I have sent you. So I was surprised. I asked him, sir, you have sent the notice? How come you are asking for copy? No, this computer is attaching my digital signature and distributing these notices. So the system is pushing various things. So we sent the copy of the notice and then started to discuss with the department as to what exactly are the grounds on which the allegation has been made. Government is very clear, and in the law, remedy by way of appeal is well laid out. Remedy by way of appeal is well laid out, and by my calculation, there will be 129 tribunal benches. 129 tribunal benches. Today in central taxes, we have 10 benches. State, we will have maybe 3 or 4 benches. We will have 129 benches because for no other reason that the that the law estimates that there will be that many cases coming up before the tribunal. If 129 benches of the tribunal will be there, imagine how many first appeal, how many suo motu revision, and how many adjudicating authorities. Therefore, I compliment SIRC for considering the urgency of the issue and placing this topic in our 9th Metro Conference, that show cause notices and appeals are a reality and a significant reality in our practices. We have to accommodate within our offices this team which will focus exclusively on litigation, because it is not possible for any professional, reasonably hardworking, to dabble with everything relating to GST. It is not possible, because if you have to prepare for a case, you can't be available to look into the financials. If you look into the financials, you will miss the time limit for notices. So therefore, litigation is a very significant reality in GST, and we'll need to attend to how we will have to look at this. With these opening remarks, I want to mention another important aspect. When we go to the tribunal, I would encourage everybody to simply, when the lockdown is relaxed, please make it a point, go and sit in the tribunal in the last row, just sit there as a student and watch the proceedings. You will learn from there. You don't have to have prior experience, and our members have shown by sheer practice and hard work and dedication that they have made a mark in the field of litigation in taxation. So please go and sit in the tribunal. Nobody is going to prevent you from sitting there. Nobody is going to have to give you permission to sit there. Simply go and sit there as a student of this law and watch the proceedings. It could be central taxes, it could be state taxes, or it could be GST itself once the tribunal becomes operational. Why should we sit and do this is, I will tell you why. Today there is a flood of notices. Everywhere there are notices, ASMT 10, audit under 65, inspection under 67, and some unnamed notices. Notices don't have head, notices don't have tail. Unnamed notices. It is sad that such notices are being given, but what is unbearable is that taxpayer is entertaining such notices. Taxpayer is queuing up, saying that anything on official letterhead, we are already sweating. Anything on official letterhead, we are already sweating. The point of encouragement that I want to leave for all our members is, in GST, the rule of law prevails. The rule of law prevails. There is nobody above this law. Anything anyone does is clearly written down in this law. My question is, have you read it? We are using common sense, we are using logic when we are interpreting the law. When we receive notices, we are acting in fear, anger, or disappointment. Fear, because it is coming on official letterhead, the mistake committed has been discovered. Anger, because what kind of interpretation is this? That is an anger. Disappointment is because how can the law do something like this? Please bear in mind, there's constant need for us to be very detached, very dispassionate. Bed number 27, surgery on Monday. This is how a surgeon approaches his craft. But we, on the other hand, we are so emotionally involved with the financial condition of the client that during COVID time, we have only delayed sending our invoices to the client because poor fellow, he is in financial distress. Bed number 27, surgery on Monday. It does not matter what is the quality, nature, characteristics of patient in bed number 27. I will only attack the disease. That is the doctor's approach. But we are looking at poor fellow. What is his business? What is his morality? What is his social standing? Is he well off? Can he afford? All the unnecessary things you go. Please perfect the craft. The notice and your craft. Only these two things matter. Do you understand the notice? Is the notice according to the law? And what is your craft? How will you ask this question? Why this is very important is, I take encouragement from the Privy Council decision in Nazir Ahmed versus King Emperor in 1936 AIR, PC 253. Privy Council said when power is given to do a particular thing, that thing must be done in that manner or not at all. If you do it like this, or you forget about doing it. In S.R. Naranappa versus CIT, Supreme Court said, passion to protect interests of revenue does not permit bypassing the due process of law. E.P. Royappa versus State of Tamil Nadu, Supreme Court again said, merely because it is an administrative function does not mean that the procedures laid down in the law can be ignored. So therefore, you have a right today to question under which section department is taking action, because if you know the section, you will know the limits to their powers. The limits to their powers will also guide you as to the nature of reply to be given. Tax chartered accountants have a tendency to give what is requested and to give what is supposed to be requested. So intelligent we are. Madam just now mentioned that we have a reputation of being so diligent and hardworking, so much so that we get ahead of ourselves, saying that I don't want the law also. You want 2 things? I will give you 20. Take it and let me see how you will pass an order. Friends, please bear in mind, litigation in GST is not like 2020 cricket. Today we got notice, tomorrow we find reply, day after hearing, then we will get a favorable order on Monday. Impossible, because the moment you get a notice, if you get an unfavorable order, you are going on appeal. If department gets unfavorable order, department is going on appeal. So therefore, always work backwards. Always work backwards. What grounds you want to take in the tribunal, you should be able to see it today. Keeping in mind the grounds in the tribunal, draft your first reply now. In 2012, Supreme Court passed a decision in a particular case on customs. 2012, they passed a judgment, Supreme Court. In that, the Chief Justice was sitting in judgment. Doesn't matter what judgment it was. Chief was sitting in the court and the Chief said, we are not in a position to provide any relief because in June 1996, before the show cause notice was issued itself, the assessee has made certain admissions before the investigating agency. The taxpayer needs to know, when to say what. Someone very nicely said this, wisdom is to know when not to speak. But taxpayer is blinded by his innocence. I have not done anything hanky-panky. What is there? I have nothing to hide. See, I have nothing to hide. I will tell everything. See, this is not a place to get emotional. It has to be very, very surgical, that the way it has to be approached. Keep in mind the grounds in the tribunal and decide the reply today. I will give you 2 sections for your consumption. Section 160, subsection 2. It says when there is a notice, order or communication. What is this? Notice is the starting of any demand and recovery. Order is the conclusion of demand and recovery, and any communication in between. All 3 are covered. Notice, order or communication. It is entertained by a taxpayer, then the taxpayer will forfeit his right to question the validity of such notice, order or communication. Whether the notice is valid, whether the order is valid, whether the communication is valid, how will you know unless you ask the question? Section 114 of Evidence Act of 1872 says, departmental actions by the state, there is a presumption that it is done bona fidely. See, bona fide action is different from invalid action. See, bona fide is the intention. Validity is according to the law. Bona fide is the intention. That means officer does not want to collect taxes even when it is not applicable. But is it not possible that the officer himself is under a confusion about GST? If you see advanced rulings, you will get some idea that there is utter confusion. Utter confusion because it is possible to interpret everything in two different ways. You see all our own interpretations. Today our members are under some unimaginable pressure to give a pro-assessee interpretation. If you give a pro-revenue interpretation, you are a useless consultant. What kind of consultant you are that you cannot interpret in a other way? Pro-assessee, pro-revenue cannot be the reason for interpretation. Interpretation is the reason for interpretation. Pro-assessee, pro-revenue is the byproduct of this interpretation. Please have your opinion. Next aspect I want to mention, especially addressing our younger members, we are becoming case law chasers. We are becoming case law chasers. Today we will read one judgment, we will go in this direction. Because there is a judgment, we will go in this direction in our interpretation of the law. Suddenly we discover there is one more interpretation, new judgment has come. Now we will abandon the direction and change the direction and start going in a different direction. Please, if you interpret the law, you interpret on your own. Arrive at your own interpretation. What is the worst that is going to happen? That interpretation will be wrong. Even a wrong interpretation, at least it is your own interpretation. Please don't outsource your thinking to some judgment, because today we are standing in an age. For every ill-conceived view, there is a judgment you will find. If you look hard enough, look long enough, dig deep enough, for every ill-conceived interpretation, you will find a judgment. So therefore, please be very careful. We need to educate ourselves about show cause notices and appeals. Very briefly and as succinctly as I can, I will caution you to few aspects only. When you look at notices, notices are issued under 63, 73, 74 or 76. That's all. Notices directly can't flow under 122, 125. No. Notices directly cannot go under 129, 130. It's all based on the framework in 73 and 74. So therefore, please bear in mind, we'll take the simplest structure in 73. When you read 73, go straight to 73.5. 73.5 says, when there is any cause of action for payment of any demand, department may issue you a opportunity to discharge this tax, discharge this demand without issuing show cause notice. They will give you a pre-notice opportunity by giving you a form called DRC 1A. When you receive a DRC 1A, you are supposed to say, I accept and you pay, or you say, I reject and you don't pay. Once you have exercised that option, then the proceedings of issuing notice will start. So after you read 73.5, then we will go to 73.1. So therefore, please keep in mind, friends, there is no such thing called spot recovery in GST. Officer came, he explained, assessee understood, he wants to pay the tax. This is not some banana republic where such things will take place. Rule of law prevails in GST. So therefore, officer has to give in black and white. You have to accept or reject in black and white. There is no, I will try to convince you that you have to pay the tax. Please bear in mind, the Supreme Court is the last authority who will decide if tax is payable or not the superintendent who is calling you to come and have a meeting. Please bear in mind, chartered accountants take great pride in telling others that they're spending entire day in the department. Better to meet the chartered accountant in the department than go and meet him in the office, because he's very busy in the office. In the department, in the staircase, in some floor, you can catch him. Those days are gone. GST does not want you to visit the department. No section. no section you can be called to the department as a chartered accountant. So don't bother about making trips to the department. Secondly, once you get this question of whether you are going to pay this demand or not, you think. There is no compelling anybody to make immediate pay. Otherwise, you see what will happen. Otherwise, nothing will happen. I'm telling you, otherwise, nothing will happen. There are instances I have come across where the taxpayer is told that they are going to be arrested if they don't pay the tax. You will be arrested. If you please read 69, you will come to know that it is impossible for an officer to publicly confess that he is going to arrest somebody, because when they have to arrest, commissioner will issue a warrant under 69(1). The warrant executing officer is always scared, don't know where this person is, where he will escape. So he will quietly call the person for a final discussion. Everything is resolved, sir, we have understood. So you can come sign one paper. We will now proceed with against somebody else. In some pretext, he will be called, immediately placed under arrest. So those who talk about arrest will not arrest. Those who will arrest will not talk about arrest. So therefore, don't bother about all this threat. Rule of law prevails in GST. Pre-notice consultation, did you get? Audit officer came, he explained something, he said you have to pay tax, and he went away. Everything verbal. No. State administration also does not know the due process in law. Pre-notice consultation, did you get? If you don't get pre-notice consultation, nothing further will proceed after that. Once you reject, once you turn down the pre-notice consultation, then only they have to issue you a show cause notice. Before going to 73(1), we will have now go to 73(10). We have to go to 73(10) because 73(10) says any notice, it has to be issued, heard, and order passed within 3 years from the due date for filing the annual return. Demand for tax will arise in 5 situations: where tax is not paid, short paid; tax is not paid, short paid; refund is erroneously sanctioned; input tax credit is wrongly availed, wrongly utilized. 5 situations. So out of these 5 situations, 1 relates to refund, 5 relates to demand. The law says within 3 years from the due date for filing annual return. For the year 17-18, when was the due date? We kept on asking for extension, they kept on giving extension. For the year 17-18, the due date was 7th February 2020. So for the financial year 17-18, the due date to issue the notice, conduct the hearing, pass the order is 6th February 2023. So till 6th February 2023, they have time to issue notice, conduct hearing, pass orders. So therefore, please don't think 17-18 is over, so let us forget about it, let us throw the books or burn it. You cannot do that till limitation is continuing. So therefore, please bear in mind, 3 years from the due date of the annual return in the case of demand, but 3 years from the refund sanction date in case of erroneous refund. Now we have to look at section 75(10), because while section 59 is the most powerful section in GST, 75 is my most favorite section in GST, because 75 contains all the safeguards for a taxpayer. All the safeguards for a taxpayer are sitting in section 75. 75(10) says, if a show cause notice is not issued and decided in accordance with the time prescribed in section 73(10) or 74(10), such show cause notice will be deemed to be concluded. It is as good as the show cause notice is no longer in the law. So therefore, friends, you have to bear in mind that just because you have not received a notice for 4.5 years, you are home safe. No. Till 6th February 2023, the sword is hanging on your head. Next, department also knows this. That is why systematic issues are being raised, and utilizing the IT systems, it is being communicated to taxpayers. So friends, please don't think that you will not receive a notice. The idea is to give you a notice. The idea is to give you a notice not based on a highly important area where you have committed a mistake. The idea is to give a notice so that somebody else can decide whether to drop it or to confirm the demand. Department has no compulsion that every notice given, it must be ruled in favor of the department. If it is dropped in higher level, it's okay. I have heard senior officers tell me, Jatin, what you're arguing is all correct. I agree. I feel I should allow your appeal, but I'm very sorry. You know, I have departmental compulsions. Please go on appeal. All the best. I'm sure you will get favorable answer in appeal. It is very sad. It is very sad that there are some unknown compulsions that make higher officers also not take a decision. What about lower officers? Why will they take a risk? If there is a risky issue, they will not rule in favor of assessee. So you're all going to go on appeal. So in keeping that in mind, understand the time limit. Why is it important? Why do I say rule of law will prevail? In the earlier tax regime, there is a starting date for giving a show cause notice. In GST, there is an ending date for giving a show cause notice and passing orders. Previously, show cause notice had to be given. Today, you see service tax notices, 26AS is not matching with ST3. Even now, we are getting notices for 16-17. Till 25th February, we will keep getting notices. In GST, notice issued, hearing conducted, order passed within 3 years from the annual return due date in case of demand, and 3 years from the date of refund in the case of refund cases, erroneous refund. Where the notice is, where the demand or the refund is erroneous because of fraud, willful misrepresentation or suppression, then that 3 years period will be read as 5 years. Then the 3 years period will be read as 5 years. So the notice has to be given, hearing conducted, order passed by 6th February 2025 for 17-18. So please keep this in mind. We have to embrace this. Now, when you look at the notices itself, let me tell you, especially members who have predominantly practiced in state taxes, let me tell you two aspects of difference. Show cause notice will be given 3 years before, 3 months prior to the last date prescribed in subsection 10. In 73, it is 3 months prior to the end date, and in 74, it is 6 months prior to the end date. Show cause notice has to be given, making the allegation, substantiating the allegation, and identifying the right cause of action in the law. I feel you are not paying tax properly. Therefore, please show cause why tax should not be demanded. Your 2A is less than 3B, therefore you are liable to pay tax. Your 1 is more than 3B, therefore you are liable to tax. Please bear in mind, we are all getting notices. Let me ask you a question. Would you rather get a poorly worded notice even though for a big amount of demand, or do you want a carefully worded notice for a moderate amount of demand? Would you rather get a poorly drafted notice for a very large amount of demand, or would you rather get a carefully drafted notice for a moderate amount of demand? Obviously, the answer is very clear. I would rather get a poorly worded notice. Why do I wait for a poorly worded notice? A poorly worded notice is a notice that is issued in haste. There is so much urgency to issue notices. Audit officer is in a hurry, enforcement is in a hurry, DGGI is in a hurry, jurisdiction office is in a hurry, everybody is in a hurry. 7 days, please give reply. If you don't reply, action according to law will be taken. Array, please take action. Let me see what action you will take. See, nobody is going to section 79 for recovery. So you take the action. What are you telling me that you are going to take action? You take it. Let me see. Please be little bit bold and courageous. Seeing anything on official letterhead, no need to start sweating. Wait. Understand the question. We have to understand the question. We are so enthusiastic about answering the question. Sometimes we don't even want the question. Sometimes we don't even want the question. I'll give you an example. The reason why examples are important is because these examples are encouraging us. We received a show cause notice that said you are liable to pay GST on other income. You are liable to pay GST on other income. We have reported in our own financials, there is another income of certain amount. So department said you are liable to pay tax at 28% on this other income. A short reply was given. Please explain what is the HSN code you have used to compute the demand. That's all. Please explain what is the HSN code you have used to compute this liability. See, because if you tell me what is the HSN code, I will know that whether you are thinking it is goods or it is service. If it is goods, then I will know whether it is covered by 2/17. If it is services, then I will check whether it is covered by 12/17. Many things I can do. So first you tell me what is HSN code. Officer called. No, sir, you have given letter like this. I can't give a reply. I said, why you can't give a reply? If I give a reply, it means this important information is omitted from the show cause notice. He also must be aware of 21380 Brindavan Beverages. Supreme Court said an incomplete notice is fatal to the demand. So he has not given reply. He has not given reply. Because if he gives a reply, he knows I will question the validity of the notice. If he does not give the reply, I will not give any further reply on merits. So a personal hearing was fixed. We attended personal hearing, told the officer, sir, I have no answer to give because the question is not complete. 28% arithmetic is there. Law is not there in this notice. I have no answer. Officer passed an order dropping the demand because he knows he can't fill up the blanks. Why? Section 75(7), you please see. Section 75(7) says the grounds on which the notice is issued, adjudication must be made on those grounds only. Another instance, we got a notice. There is a dealer in Karnataka who has not taken registration in Karnataka. He has a branch office in Chennai, so he has a registration in Tamil Nadu. This dealer has charged CGST, SGST. Dealer has charged CGST, SGST. He has collected CGST, SGST in Karnataka. Since he does not have a GSTIN in Karnataka, he has deposited the CGST and SGST in Tamil Nadu GST number. So we received a notice. The notice said the officer did an inquiry. So in the inquiry, this fact came to light. Officer said, okay, CGST you have paid in Tamil Nadu, CGST, both are center, you forget it. I am only interested in my state revenue. And officer gave a show cause notice only for SGST. We were extremely happy with this notice, only SGST. So we said, sir, I don't want to give a reply. Directly, let us go for the personal hearing. I don't want to give any written reply. You have given me the notice. Directly, I will go for the hearing. Officer said, what is this? Normally, everybody is taking adjournment to file reply, wrong reply. Sir, don't want any time. Directly, when today you want to fix personal hearing, tomorrow morning, whenever you are free, you fix hearing, we will have a hearing. So officer fixed hearing. During hearing, we said, sir, we are not going to give any reply. We are not going to give any reply. You please give the demand order in APL 4. You please give demand order in APL 4. but fill only SGST box. You cannot fill CGST box because the show cause notice is only for SGST. Because you know in the system, if you fill CGST, it will automatically fill SGST. If you fill SGST, it will automatically fill CGST. So we said, sir, you proceed to give APL4. Officer passed order dropping the demand. Friends, you need to know how to get the relief. We are too much bothered about the truth of the case. We are bothered about the truth. Truth is not relevant. Facts are relevant. What are the facts in the notice? That is relevant. 75(7) says the same grounds on which the notice is given, the order must be passed. The adjudicating authority cannot fill up the blanks. What is this? This notice is not proper. So in an officer's training, we were helping them understand that, sir, you don't know how to give notices. Please give notices properly. Officer said, so what if I have made a mistake? I will give corrigendum. So I said, under which section you will give the corrigendum? See, if you see section 75(3), it says you can give a statement of demand, sir. 73(3). 73(3) is once already a show cause notice is given, same mistake committed in the subsequent period, instead of giving a fresh show cause notice, an addendum called a statement of demand can be given for the subsequent period. 73(3) SOD has nothing to do with addendum, so therefore you cannot give addendum. So officer said, if I made a mistake in the notice, what I should do? Nothing. Drop that notice, give fresh notice. So therefore, friends, before you answer the question, question the question. My question to you is, do you know how to question the question? Why we should question the question? Because Rule 112 says an appellate authority or the tribunal should not entertain any new grounds. So friends, if you are planning to raise any grounds in the appeal, you should have raised it already now. If you are planning to raise any grounds in appeal, you should have already raised it on day one when you received the notice. So therefore, my sincere request to all members, please don't answer the question without first questioning the question. If you are not sure whether you can question the question, please take encouragement from section 160 subsection 2. It says you have a right, you have in fact a duty to question the validity of any notice, order or communication, because if you don't question it in the earliest proceedings, you can forget about questioning it later. So therefore, friends, please take encouragement. It is all right. No officer will get upset. How long will you entertain officer from getting upset? How long? GST is the time where you should stop bothering about making friends with officers. No requirement for any. Be respectful. No need for unholy friendships with any officer. Please be respectful. They are doing their job and they will do their job well also. Please stick to the law. You will see respect in the eyes of the officer. An officer might even call you and say, I'm reading about this judgment. I'm not able to come to a correct interpretation, satisfactory interpretation. I want to see what your view is about this judgment, because he knows he has respect for your knowledge. And that is the place chartered accountants have always occupied. Seniors who have gone before us have shown by example that that is what they have stood for. So therefore, it is a path that seniors have traveled that we simply need to follow. The reason why these things are important is because today we cannot answer something out of fear, anger, and disappointment, because it will color our eyes. We will be blinded by unnecessary considerations. Stick to the facts. Facts in the notice. Don't bother about the truth. Truth is not what is on trial here. The notice is on trial here. So please keep this aspect in mind. Notice, whenever you receive a notice, it will be accompanied by a summary in DRC 1. If you see Rule 142(1) small a, it says when a notice is issued and you're supposed to give a reply, you have to give a there will be a summary in DRC 1A. You need a show cause notice, you need a DRC 1. You need a show cause notice, you need a DRC 1. It cannot be only show cause notice or only DRC 1. It has to go together. If you get only DRC 1, don't answer it. Write a letter asking for both to be given together. Only DRC 1, don't answer. Write a letter asking that both should be given. So therefore, it is not possible that the two will be given on two different dates. Both have to come together. It says accompanied by a summary in DRC 1. When statement of demand is issued, it will be issued with excuse me. When statement is given, it will be statement of demand is given, it will be issued along with DRC 2. So friends, we have seen three summary forms: DRC 1A, DRC 1, DRC 2. Please keep in mind, when you get DRC 1A, it means you have a limited choice. You agree or you disagree. If you get DRC 1 or 2, you have to give a detailed reply. You have to give a detailed reply, keeping in mind that you are going to get an adverse order immediately and later only you will get relief. How you should answer today, you must practice. If you get a summary in DRC 7, DRC 7 will come in 62. Best judgment assessment ASMT 13 with DRC 7, or when a show cause notice is adjudicated, you will get. So therefore, please bear in mind, DRC 7 means it is going to go to the bank for recovery action. When there is any DRC 7, you have maximum time 3 months to sit and think. So please be very careful. When you get anything with a DRC 7 attached, don't take it lightly. Why? Because when you get a show cause notice, you have time. 7310, 7410, time limit is there to give a reply and attend the hearing. But when you get a DRC 7, please look at section 78. 78 says whenever a demand is made, no recovery action should be taken for 3 months. After that, recovery action under section 79 can be taken. So therefore, friends, please be very careful. When you get DRC 7, it is a recovery notice. In 3 months, you have to take action. What is the action? File an appeal under section 107(1). I don't know how to file appeal. I don't know how to write grounds. I have never done this. What do I do? Where do I go? Who will teach me? I don't have a senior. Many seniors who have gone before us have taught us that even without a senior, you can do well in litigation. So what is the problem in getting into litigation? Because every order that is adverse, you can file an appeal. To file an appeal, you don't need any great mastery. Let me tell you, GST has made it possible for everybody to understand how to file an appeal. Please bear in mind, there are essentially 3 points that all the grounds revolve around. The order is contrary to law. The order is contrary to law. It could be the wrong section applied to the right facts. It could be the right section but applied to the wrong fact. So it is contrary to law. Second, it is contrary to the facts. I have said on so and so date, you are saying on some other date. You said I have not filed. I am saying I have already filed. It is contrary to law, contrary to facts, or it is contrary to judicial or administrative authorities. Judicial authorities are court judgments. Administrative authorities are binding circulars. All grounds finally revolve around these 3 things. Now please consider, when we file appeals tomorrow, when everything becomes online, we cannot file 30 pages of grounds of appeal. Sir, those days are also gone. There will be size limit and word limit. So therefore, please bear in mind, the reason why you will have a hearing is because you can then explain what exactly is the contrary to law that has been done, what exactly is contrary to facts that has taken place, what exactly is contrary to which judicial authority or administrative authority this order has gone wrong about. So therefore, please Start with these 3 grounds and then you will see how to build this. No, my English language is not very good, so I don't know how to write. Please, nobody's English language is very good. None of us speak English at home. We are all speaking Kannada, Tamil, Telugu, Malayalam, Hindi. Nobody speaks English at home. It does not matter. Can you write 2 simple sentences? No, I have seen other appeals, very beautiful, 3 pages. The grounds itself is so long. Each ground runs into pages. No appellate authority is going to be impressed with the length of your appeal memo and decide in your favor. It all turns on the law, the facts, judicial and administrative authority. So therefore, please take encouragement, get into this area because this law is beckoning you. I'll mention 3 cautions. 3 months time is there to file appeal. 3 months time is there to file appeal under 1071. Till the last minute, don't sit and keep on thinking what to do. As soon as you get an order, as soon as you get an adverse order, please do 2 things. First, make 10% deposit payment out of the total demand. See, total demand will have tax, interest and penalty. You forget the interest, you forget the penalty. Only the tax 10%. Please make a refundable deposit. Just make a deposit saying that under DRC3 voluntary others, make a deposit of 10% because I have seen many appeals get dismissed because they did not deposit the amount of pre-deposit correctly. If you look at section 107(6), it says an appeal will not be considered as filed unless the pre-deposit of the disputed tax is made. So therefore, please make that deposit fast. No, I will send the letter to the client. Client will take some time. He has to get approval from his bosses. Like this, it will keep on going. Entire 3 months will be gone. Please don't start this process in the last minute. And when you are making this pre-deposit of 10%, please round up to the next highest figure, because few hundred rupees also, if we make a mistake in making the pre-deposit, there is no power with the first appellate authority to admit the appeal. First is do this. Second, there is a requirement in Rule 108(3), not Section 108, Rule 108(3) and 1104. The rule says that a certified copy of the order must be filed. Now, certified copy under the earlier regime was self-certified. If it is self-certified, they can say self-certified. Why they are calling it certified copy? So until the tribunal procedure rules get notified, there is no clarity whether it has to be certified by the department or certified by the assessee. Many appeals have got dismissed because it is self-certified. So second thing to do is file a request for issuing a certified copy. Many officers are now saying, I have only passed the order. Why should I give you certified copy? Sir, you give me certified copy. You don't give me certified copy. I don't care. But you please take my request for certified copy. I will go to the appellate authority and say you are not giving me the certified copy. Why? Because the law says as soon as you file appeal in APL 1, the department will give you an acknowledgement. Within 7 days, you are supposed to submit the certified copy, which means the law also visualizes a time delay between filing APL 1 and filing certified copy. Only after you file the certified copy will you get APL 2. APL 2 is the final confirmation that the appeal has been filed in accordance with the law. If within 7 days you file it, then the date of filing will be considered the date of actual filing. But if you delay after 7 days, suppose on 20 days later you file the certified copy, the actual date of filing the certified copy will be the date of filing. Now you may have missed the 3 months. So therefore, please don't lose cases because of technicalities. 2 things to do as soon as you get the order. Let us say you finally decide not to go on appeal. Let us say finally you decide not to go on appeal. You want to accept the liability. So the remaining 90% with interest and tax you can pay. That's all. But if you decide to go on appeal, you're already reached the 3 months is over. Now what are you going to do? So therefore, take these two preparatory steps. After you take the preparatory steps, third step, draft some simple grounds, generic grounds, file APL 1. After you have filed the appeal, collect the APL 2, then go to all the experts to see whose help you want to take to argue the case. Many times I have seen this searching for the expert itself will take 4 months. Then what will you do? Searching for the expert itself takes 4 months. Then what will you? So file an appeal, get APL 1, get APL 2, and then you see what help you require to argue the case. Friends, please bear in mind, we are very often considering that appeal is not so important. It is a choice topic. We don't have to focus. There is already enough things to do before going for appeal. My sincere request is all issues will end in appeal. All issues will end in appeal. Since all issues are going to end in appeal, how you handled the case before the notice was issued will be relevant. You need to know how the situation is going to be in appeal in order to decide what you should do on receiving the notice. Please keep in mind the pitch condition on the 5th day to decide on the first day whether you will opt for batting or fielding. In case you win the toss, whether you want to opt for batting or you want to opt for fielding, you have to decide keeping in mind what you think will be the pitch condition on day 5. It is very important. It is strategy. It is like chess. It is like something that our members are poised to have mastery over, because we are able to visualize things. You look at a journal entry, you know what was the rectification that was attempted to be made, therefore what was the error that was committed, therefore where is the system weakness, what sort of situation is going on. Since we are capable of visualizing 2 steps ahead, we'll need to simply use that here. When you look at GST, appeals, show cause notice, reply, hearing, it is going to become completely online. Today it is partly online. Some states are ahead, some states are behind, but one day, very soon, all this will be online. So for young members, this is something that I want to also invite you to consider. Develop expertise in the portal. The portal itself, how it works, develop expertise. You must know how to upload appeals online, how to file replies online, how to select hearing date, how to file for adjournment online, and how to have virtual hearing. What to say in the virtual hearing, somebody will be able to help you. But how to operate these tools, that is an area there where you can develop skills, and it will be a much sought after skill. I remember when I was doing articles, we used to have a computer room. There used to be a computer room in my principal's office, and only that room had air conditioner. It was a computer room, only that room had air conditioner. We have to leave our footwear outside and enter that room. We will handwrite the financials and give it to that typist. No, he was called EDP manager, electronic data processing department manager. We will handwrite, give it to him. He will type it in the computer and give it to the partner. From those days to today, you are sitting in some city, I am sitting in some city, panel members are sitting in some city, chief guest is sitting in a different place, and we are all able to exchange ideas. This is what technology can do. So mastery over the technology platform is an immediate area where our young members can throw themselves into and develop expertise and collaborate with seniors, because your skill is going to be much sought after. It has to be collaborative, because that is the way it's going to operate. So therefore, when you look at notices, it is no longer about the truth. You will ask for one information, sir, I tell you what you should ask. You should ask for segmental report. I know how to prepare Tamil Nadu trial balance, HO account, branch account with reconciliation. I will prepare in Excel. I will do a pivot table and I will give you a report. Nobody wants all this. Limit your answer to the question. If you get a stupid question, you will give a stupid answer. Why? Because the answer is guided by the question. The question is asked. Let me tell you, the question is asked not because somebody has a doubt about something. This is not a teaching classroom. The question is asked because somebody thinks yet another interpretation is possible in this given situation. Yet another interpretation is possible in this situation, so a question is asked. A question is asked not to clarify the doubts. The question is asked to put you in a spot to see what alternate interpretation can be canvassed. So when an alternate interpretation can be canvassed, it will be canvassed. Friends, in GST, you are familiar. Take any provision, two interpretations are possible. Why? It is possible. Is it correct? Not necessary. Only one of them is correct. But which one is correct? Both seem to have equally forceful arguments. So therefore, they are diametrically opposite motivations. Taxpayer wants to take an interpretation that gives him the least tax consequence. Tax department wants to take an interpretation that gives the highest tax consequence. Both have respectable views. Neither are wrong. But it is possible. Because two views are possible, views will be taken. And when you look at this issue, please bear in mind, it is not that it is going to end in a situation where somebody is going to pick up your case for scrutiny under 61 or audit under 65 or inspection under 67. They will come here, look at everything, spend a month looking into your file, and then they will say, shabash, excellent, fantastic, and give you a clean chit. Who better than us auditors to understand what is the motivation? During my articleship, I went for one internal audit. It was somewhere between first year, second year of articles. I also did not know. First time I am sitting in this audit without a senior. Previous year I had gone there, I had a senior. Next year my partner sent me, you go there on your own, you know what is to be done. You spend 10 days. I want you to come back with observations and I will tell you how to prepare the report. I called my senior and said, I don't know, have any observation. Did you check BRS? Yes. Did you check trial balance? Yes. Did you check some key ledger accounts? Yes. I checked whatever I knew how to check. I concluded that there is no finding. Senior said, no, partner will be very upset if you don't have any observation. Just a second year I'm entering. I got scared. What did I do? After 3 more days, I came back to the office with a big file of observation. That time we used to have big box files from audit. So I bought a big file, said all my observations are here. What are your observation? My observation is following list of payment voucher without revenue stamp. My only objective was to find a fault. My objective is not to give a clean report. My objective is to find a fault. When your number, your GST number gets selected for scrutiny under 61, audit under 65, inspection under 67, it is not to give you a clean chit, because the desk review has already been conducted. Whatever you have filed is already been examined. If everything is okay, they would not have selected your name. Because they believe something else can be canvassed, they are coming after you. So therefore, expect, if your name or number shows up on the radar, it is a test match. Your number has been selected, the coin has been tossed, get ready for batting. Please don't think that you will give some answer and the officer will be satisfied. The last aspect I want to leave here as a thought with you is, when notices come on official letterhead, taxpayer wants to settle the issue. Sir, I don't want notices. I don't want notices. Make this notice go away. In GST, the second thing that has been done is discretion is taken away. There is no one person who has so much power that he will make everything go away. GST has taken such a, no less than a constitutional amendment was needed to bring about this law. It is our responsibility to take advantage of the safeguards that is there in the law. So what if we have to file an appeal? I'll tell you my experience in Karnataka. When a VAT order was passed, However bad the order may have been, 30% of the entire demand of tax, interest and penalty had to be pre-deposited. 70% bank guarantee had to be given if I had to go on appeal. Today in GST, I have to make a deposit of only 10%, that too only of the tax. Where is the hesitation now to exert your rights? Get what the law promises to give us. In GST, rule of law stands tall. So therefore, please be fearless. You have taken a tax position. You have taken a position. No 16.4 is not applicable. No 36.4 is not applicable. No 86A is wrongly applied. You have taken a position. No 17.5 is not applicable. 42-43 reversal is correctly made. Be confident about your position, no matter what somebody else says. In GST, the most powerful section is section 59. It says every registered person shall self-assess his liability and discharge the taxes payable through the returns under section 39. When you have done the assessment, it is the department's responsibility to impeach your assessment. Section 155 says, when a person claims input tax credit, the burden of proof of eligibility is on such person, which means barring eligibility to ITC, all other aspects, the burden is on revenue. So don't rush to answer the question and prove your innocence, because you don't have to prove your innocence. Revenue has to prove your guilt. So stand firm and hold on to it, saying you will only question the question before you start answering any question. I thank SIRC for giving me this opportunity and all members for your participation. I wish you the best for the rest of this Metro conference. Thank you all very much.
Thank you, Jatin Christopher sir. Namaskar. Wonderful presentation from you, and you have to question is the highlight on your message, and the topic has been well handled, and I think the people would have been benefited by your presentation. And I think most of us rush to answer the questions instead of studying the question itself or checking the question itself. I agree to you. This is one of the lessons what we have learned today. Thank you, sir. Thank you for your wonderful presentation. Thank you so much, sir. Thank you. I now welcome Sri Banusekar, sir. Namaskaram, sir.
Namaskaram, sir. Just give me a minute, sir.
Banusekar, sir. Namaskaram.
Sir, I'm having a little problem with the connectivity. Just give me 1 minute, sir.
Yes, sir. Yes, sir. Yes, sir. I'll wait, sir. No problem.
Sorry, even also, Yashwant.
Sir, do you have any PPT to present, sir, or else only deliberation?
Sir, I don't have a PPT, sir. I don't have a PPT.
Okay, you'll take the present rights back, sir. Thank you.
Shall I start? Yeah.
I think so. Yes, sir. We can go ahead.
Yes, sir. You're visible.
Yes,
and
sir.
Thank you.
I welcome Sri Banusekar, sir, to this program on reassessment under the Income Tax Act. And I'll give you a small hint about him, because reading his profile will be a big exercise for me, because it's a big one and is a very senior person. And Sri CA Banusekar, sir, is a chartered accountant and was in practice since 1994 before turning as a representative to courts. Has represented our members in the regional council during 2001 to 2004. We thank you, sir. Just by you have not stopped your work after representation, but also you are continuing us by educating us. Thank you, sir. He has contributed articles on direct taxes and international taxation to several tax journals, including Consolidated Commercial Digest, published by the publishers of income tax reports, taxman, tax references, and the income tax review published by the Chamber of Tax Consultants, Mumbai, have argued a number of landmark cases before the various branches of the income tax tribunal, appellate tribunal across the country, which have resulted establishing precedent for many common contemporary issues. Chief among them are Ford India Limited relating to claim of deductions for warranty expenses, Saxoft Limited before the special bench on parity between numerator and denominator in computing the deductions under Section 10A. Ford Business Services Center Private Limited relating to the benefit under Section 10A. SSI Limited relating to taxability of ESOP, etc. He had authored books, the following books: Handbook on Assessment Procedures under Income Tax Act 1961, Search Assessment under Income Tax Act. He had delivered lectures and presented papers on direct taxes and international taxation at seminars, meetings, workshops, and conferences arranged by ICAI, SIRC of the ICAI, by the other professional and public bodies, including several branches of various regions of the Institute of Chartered Accountants of India. Was a special invitee in the Direct Tax Committee of the ICAI and in Continuing Professional Education Committee. Presently a co-opted member of the Direct Tax and International Tax Committee of SIRC of ICAI. Apart from all this, is a Dronacharya for so many students who are even Ekalavans. They have not even seen him, but still they take him as a guru. That's the credibility of Mr. Banusekar. I welcome you to the show, sir. Thank you, sir. The forum is yours.
Thank you, Mr. Sundarajan, for the very kind words. Before I start, one thing I must tell about Mr. Sundarajan is that what he read was what I gave. So a lot of things that he said have to be discounted. Of course, there were a few aspects that he did share, which were not part of the written biodata that I had given. So thank you, sir, for the very kind words. At the outset, I am very grateful to the Institute of Chartered Accountants, the Southern India Regional Council, for giving me this opportunity. In fact, when Mr. Sundarajan was, presenting me before the audience, he was saying that I represented the institute, I represented in various fora relating to assessees, and I still carry on my, the job of educating the members or making members more enlightened. Sir, I think I will make a small correction here, sir. I don't accept any opportunity to enlighten any member. I accept all the opportunities because all these are, according to me, an opportunity for learning. I still believe that every time I agree to speak, I read again. And every time I read, I come up with some fresh thoughts and fresh ideas. And probably I should agree, more often than not, fresh doubts in my mind too, which keeps me thinking, which helps me to learn and probably, if I can say it a little more crudely, even to earn. Because I use the same knowledge to argue a case and earn as well. So, sir, to that extent, I will request you to, support me in my view that I don't accept any presentation for any public service. I do it out of a selfish interest to learn. I do it out of selfish interest to learn. It is not in public interest that I do it at all. Sir, thank you very much. Now, the subject matter for discussion is with regard to reassessments under the Income Tax Act. Now, friends, I had an opportunity to listen to some part of what Mr. Jatin Christopher was saying. And he was saying that under the GST law, we presently need to pay only 10% to present an appeal. Now, earlier, when I used to be much younger, I still remember there used to be a pre-deposit under the excise law or the sales tax law, etc., which used to be quite substantial. In fact, many people used to have a lot of difficulty in the pre-deposit. and he was saying it is presently only 10%. Well, unfortunately, income tax law, they have made it almost, though technically there is nothing called a pre-deposit, they have almost made it appear like a pre-deposit where assessees, even to present an appeal, they say you pay 20%. Of course, not that the appeal is not maintainable if that 20% is not paid. But on the same, the fact remains that almost virtually they insist that 20% is paid when appeal is pending before the first appellate authority. There seems to be a lot of difficulty in understanding the board instructions in this regard, etc. But the confusion is quite a bit, and there seems to be a lot of pressure on demands which otherwise are unsustainable in law. Well, friends, coming back to the subject of reassessment, all of you are aware that there have been very substantial amendments made by the Finance Act in the recent past, where there have been amendments with regard to the entire scope of reassessment. Now, the procedure for reassessment or the reassessment provisions contained in sections 147 to 151 were fairly well settled, with a number of court decisions and all of it on the subject, where the law had been, to my understanding, fairly well settled. Except that on facts we had to demonstrate in each and every case that a particular situation, a fact situation existed, so that we could take the benefit of a particular legal interpretation given by the courts, or where it is expressly provided for in the provisions of the Act. Well, the lawmakers in their wisdom have sought to amend the provisions by inserting a new 148A and making substantial amendments in sections 148 to 147 to 151 otherwise, laying down a completely new procedure for reassessment. Now, what is a reassessment? Basically, every one of us will understand, having exposure for some time, that a reassessment need not necessarily be a second or a subsequent assessment. Even the very first assessment can be a reassessment if the income has already not been assessed. What I will do is, I will start with a basic discussion of the provisions as they stood prior to the amendments made, and thereafter look at the amendments that have been made by the recent Finance Act, where the provisions have been amended to insert a new section 148A, laying down a new procedure and completely altering the mechanism by which a reassessment can be done. Now, the proceedings or the provisions as they stood before the amendment was that the assessing officer should have reason to believe that income chargeable to tax has escaped assessment. So, A, he must have reason to believe that income chargeable to tax has escaped assessment. B, he is required to record his satisfaction in writing. He is required to record his satisfaction in writing. Thereafter, wherever required, he was under law, he was under a mandate to obtain the prior approval of the Joint Commissioner, or as the case may be, the Commissioner or the Principal Commissioner of Income Tax, before issuance of notice under 140. Now, once he had reason to believe and recorded his reasons and had obtained proper sanction for issuance of notice, he issues a notice under section 148, and the mandate was that the assessee must file a return in response to such notice. The assessee must file a return in response to such notice within the time that is contemplated in the notice under section 148. Once a return is filed in response to the notice, the assessee may ask the assessing officer to give him the reasons for reopening, and the assessing officer is under a mandate to give the assessee the reasons that are recorded in writing for the reopening of the assessment. The assessee thereafter has a right to file his objections, if any, to the reasons that are recorded by the assessing officer, and in case the assessee exercises his right to file his objections, the assessing officer is required to dispose of the objections by a speaking order. He is required to dispose of the objections by a speaking order and then proceed with the reassessment. Now, of course, these are all not expressly provided, starting from the fact that you may ask for reasons, etc., are not expressly provided under the Income Tax Act itself, even prior to the amendment. But then we had the decision of the Supreme Court in GK and drive shafts. In GK and drive shafts, where the Supreme Court had held that if the assessing officer issues a notice under 148, the right course of action is for the assessee to furnish a return in response to the notice, thereafter ask for reasons. The reasons once asked for, the assessing officer is under a mandate to furnish the reasons. And once the reasons are furnished, the assessee may, if he so chooses, file his objections to the reasons. And once objections are filed, the assessing officer is under a mandate to dispose of the objections by a speaking order before proceeding with the reassessment. Now, this is the basic procedure for issuance of notice before proceeding to make a reassessment under law, as it stood prior to the amendment. Now, what I will do is to go to some of the nuances which were existent under the provisions of reopening as they stood prior to the recent amendments. Why I am doing this is twofold. A, the pending reassessments are still at various stages of assessment and litigation. And B, that we need to understand the revised or the amended provisions in the light of the existing provisions and see what is the departure, so as for us to understand what exactly is contemplated by the amended provisions relating to reassessment. So as I mentioned, the law requires that the assessing officer must have reason to believe. Believe what? That the income chargeable to tax has escaped assessment. Believe that the income chargeable to tax has escaped assessment. I will not waste much of my time and yours on what is the meaning of income chargeable to tax escaping assessment, except that I will say that even if the income has been assessed at lower than the rate at which it is rightly accessible to, the income can be said to have escaped assessment under the provisions of law. What is reason to believe? There is no hard and fast definition for the term reason to believe. The courts have been called upon to interpret the meaning of the term reason to believe, and the courts have consistently held that reason to believe should be based on tangible material and is something more than mere reason to suspect. Reason to suspect is simply a suspicion on the part of the assessing officer. That is what we call fishing and roving. But belief is something stronger. He must have information in his possession which gives him the belief that income chargeable to tax has escaped assessment. So we are talking about reason to believe, and that the reason to believe must be that income chargeable to tax has escaped assessment. But before we proceed further, we have to understand that the law mandates that the reasons must be recorded in writing. I am emphasizing on all these because these have to be understood in contradistinction with the changes made in the law in the recent past as well. The law mandates that the reason must be recorded in writing by the assessing office. And needless to mention that the reasons must be based on tangible material. In fact, the courts have consistently held that existence of belief is necessary for reopening, but the court will not enter into the sufficiency of the reasons recorded for reopening the assessment. Right? the sufficiency is not to be entered into by the courts, but reason to believe must always exist. So one can see that the plain language says reason to believe, which means that the assessing officer must entertain such belief based on tangible material. He must entertain such belief based on tangible material. So a larger question arises. Can he exercise his power of reopening by issuance of notice under section 148 on the basis of mere information that he receives from a third party? The third party being a third party agency, like say the Enforcement Directorate or the Central Bureau of Investigation or any other third party, the Central Excise Department, the GST Department, the Sales Tax Department, any of these. Or can it also be from information that is generated within the department? Because we are all aware that within the department there is various information that gets generated by different wings of the department. So can that also be a basis? The answer is a categorical yes. Whether the information comes from a third party agency or whether the information comes from within the department from a third person, or whether the assessing officer finds out that information by himself, it doesn't make a difference. He can issue the notice under 148. But where the information is coming from a third party agency or from a third party within the department, the courts have consistently said that if the assessing officer has not applied his independent mind to the aspect, then it is a case of borrowed satisfaction. And borrowed satisfaction cannot be a basis for reopening. So we were broadly discussing about what is reason to believe. Reason to believe should be based on tangible information and should be after due application of mind on the part of the assessing officer who is recording the satisfaction and who is going to issue the notice. We also said that in certain circumstances, the prior sanction of the commissioner, the principal commissioner, the joint commissioner or the additional commissioner of income tax is required before the issuance of a notice. I'll come back to this aspect in a little while. But as I said, application of mind on the part of the assessing officer recording the satisfaction is a prerequisite for issuance of notice. Now, though the law requires that I must file a return in response to a notice, nowhere the law provides that the reasons for reopening must be communicated to the assessor. However, the Supreme Court in GK and drive shafts has held that the reasons for reopening must necessarily be communicated to the assessor. We have an interesting decision of the Bangalore bench of the tribunal in a case called Hotel Woodside. Incidentally, I have circulated a word file with the organizers, and I guess they will circulate it among the participants. That contains all the case laws. I don't think one needs to make note of it. But in any case, if somebody has any case laws that you would like to discuss, we can always discuss at a later point. The Bangalore bench of the tribunal in Hotel Woodside said that reasons need not be asked for in writing and need not be asked for only after filing of the return. Even without filing a return, before filing of the return, even if reasons are asked for, the reasons should be provided, but subject to the fact that the return must always be filed, without which you don't have a right to get the reasons. Now, what happens if the reasons are not given or communicated to the assessor? First of all, remember, the assessing officer is under no obligation to communicate the reasons to the assessee, except where the assessee makes a request for communication of such reasons. If you don't ask for the reasons, the assessing officer is under no obligation to furnish the reasons to you. But if you do ask for the reasons, the assessing officer is under an obligation to furnish the reasons to the assessor. What if he does not furnish the reasons? You have various decisions of various courts, the Bombay High Court, the Delhi High Court, the Karnataka High Court, all of these, where they have held that if reasons are not given despite a request made by the assessee, the assessment so passed is contrary to law and is bound to be quashed. So if there is a request from the assessee for giving the reasons and the reasons is not given to assessee, the courts have held that the assessment itself has to be quashed. Now, there is a next stage. Once I get the reasons, I have a right as an assessee to file my objections to the said reasons. That's my right. I may or may not exercise it. Once I exercise my right to file the objections, the assessing officer, as per the decision of the Supreme Court in GK and Drive Shafts, is bound. He is bound by law to dispose of the objections by a speaking order. He is bound by law to dispose of the objections by a speaking order and thereafter proceed with the assessment that is to be framed. Now, what happens if he does not dispose of the objections by a speaking order? If he does not dispose of the objections by a speaking order, there are various decisions where they have held that the reassessment itself is bad in law. Of course, there are conflicting decisions of Madras High Court. All other high courts, the courts have held that reasons, if not disposed of by a speaking order, the objections, if not disposed of by a speaking order, the assessment is void ab initio. Madras High Court has conflicting decisions, but the later of the decisions is in Pentafor Software Employees Welfare Federation, where the Madras High Court has held that non-disposal of objections by a speaking order will invalidate the assessment. In fact, the Chennai Tribunal, in a case called C. Selvaraj, has followed this decision of the Madras High Court as well, being the later of the two. The earlier decision of the Madras High Court is in Home Finders, where the Madras High Court held that it is a procedural irregularity and it can be cured by setting aside the matter back to the file of the assessing officer. Whereas in Pentafor Software Employees Welfare Federation, the Madras High Court held that it is void. All other high courts have held that the reassessment is void ab initio if the reasons, if the objections are not disposed of by a speaking order. Next is with regard to various other aspects in reopening. Now, before we proceed to some other aspects on reopening, first thing let us understand that on the old provisions of reopening, there were different timelines for reopening. So the first timeline was within 4 years from the end of the relevant assessment. There were no tags attached to it. Within 4 years from the end of the relevant assessment year, the only requirement was reason to believe that income chargeable to tax escaped assessment, recording of reasons in writing, and obtaining sanction wherever required. But beyond 4 years and up to 6 years from the end of the relevant assessment year, it was still possible to reopen an assessment, provided there was a failure on the part of the SC to make a full and true disclosure. Beyond 4 years and up to 6 years, there must have been failure on the part of the SC to make a full and true disclosure. The law also provided for a reopening in certain circumstances up to 16 years from the end of the relevant assessment year. When can they reopen up to 16 years from the end of the relevant assessment year? The law provided that the income in relation to must be in relation to an asset located outside India, including a financial interest of any entity, and in which case the income escaping assessment is in relation to an asset located outside India, the reopening can be up to 16 years from the end of the relevant assessment year. 16 years is an extremely long period. Because if you are saying 16 years from end of the relevant assessment year, we are talking 17 years from the previous year. That's a long period, which is what the law provided for. But then remember that it is not enough if there is an income chargeable to tax that has escaped assessment to cross that barrier of 6 years. It is necessary that that income must be in relation to an asset, A, and B, that asset must be located outside India. For example, if I have a bank balance and interest from the bank balance, then the asset being the bank balance located outside India, my bank balance is in say Switzerland. Then yes, the reopening could be done up to 16 years from the end of the relevant assessment. But if the asset is located in India, then maximum would be 6 years. I still have something to add when I come to the provisions of 153A, which will apply only in cases where there is a search or a requisition. So we have a scenario where if an asset is located outside India, the income is in relation to that asset located outside India, the reopening can be up to 16 years from the end of the relevant assessment year. But if the asset is located in India, no, not up to 16 years. If it is not an income in relation to an asset, the income is not in relation to an asset, then again, it cannot be reopened beyond 6 years from the end of the relevant assessment, even though the income may be outside of India. For example, if I have a salary income outside India, which is taxable in India, it is not in relation to an asset outside. Therefore, the escapement is not of an income in relation to an asset that is located outside India, and consequently, the reopening cannot be beyond 6 years from the end of the relevant assessment. Of course, friends, you will recollect that the provisions of 153A to 153D also provide for some kind of an assessment, or in some, I would say very crudely, some kind of a reassessment where there is a search or a requisition that is made on an assessee, or on where the assessee is a connected person to a person who has been searched or requisitioned. There again, the proceedings under 153A are initiated for 6 years. 6 previous years preceding the previous year of search. So the 7th preceding previous year, if at all they want to, they can only reopen the assessment. But 153A also provided that they can travel beyond 6 years and go up to 10 years, 10 assessment years from the end of the relevant assessment year, relevant to the previous year in which the search is conducted. So if you are looking from the previous year of search, they could go back up to 9 years. But then the requirement is for that or those years, the income escaping assessment should be rupees 50 lakh or more and should be represented by assets. So if you have an unexplained expenditure which relates to the 8th or the 9th year preceding the date of search, preceding the previous year of search, reopening is not possible even if the amount exceeds 50 lakh. Because the law requires two things. One, the amount should exceed 50 lakh, and two, it should be represented by assets. Please remember, for the first 6 years, the 153A notice had no requirement as to what is a quantum of income escape. Likewise, for the 7th preceding year, where the assessee would be visited with a 148 notice, the compliance with only 148 was required. 148, of course, would say that if the reopening is beyond 4 years from the end of the relevant assessment year, and if an assessment has already been completed in 143.3 or 147, then the income escaping assessment should be rupees 1 lakh or more for the assessment to be reopened. So it's only a 1 lakh limit for the 7th proceeding year. For the 8th and 9th year, 50 lakhs is the limit. But remember that this 50 lakh is in the aggregate for the 8th and 9th preceding years. It is not that 50 lakhs is not with reference to each year. And again, that 50 lakhs is only an estimated belief of the assessing officer. The ultimate income may turn out to be more than 50 or even less than 50. Doesn't matter. That doesn't matter. So we have a situation where the law provided for various kinds of assessment and time limits for reopening. Now, as I mentioned a little earlier, if a reopening has to be made under the erstwhile provisions beyond 4 years from the end of the relevant assessment year, there are two conditions. One, there must be a failure on the part of the SC to make a full and true disclosure. And B, the income escaping assessment should be rupees 1 lakh or more. But then remember that this is required only where the assessment is completed already under 143.3 or 147. Therefore, if the original assessment was not completed under 143.3, failure to make a full and true disclosure on the part of the SC is no longer required. Now, should I prove that there is no failure on my part, or is it the assessing officer who has to demonstrate that there is a failure on my part to make a full and true disclosure? The law is couched in very interesting language. It says no reopening can be made or no reassessment can be made where there is no failure on the part of the SC to make a full and true disclosure. So the failure on the part of the assessee to make a full and true disclosure must be demonstrated by the revenue. They will have to say what is the failure on the part of the SC to make a full and true disclosure. So that leads us to the next aspect. I, as an assessee, am under no obligation, even where the reopening is beyond 4 years from the end of the relevant assessment year, and where the assessment has already been framed originally under 143.3 or 147, to show that there is no failure on my part. It is on the revenue to demonstrate. The burden is entirely on them to demonstrate that there was, in fact, a failure on my part to make a full and true disclosure. Of course, at this point in time, it is interesting to note that you have an explanation to section 147, which says that mere furnishing of books of account does not mean that the assessee has made a full and true disclosure. But we also have a very interesting decision of the Supreme Court in a case called NDTV, New Delhi Television Limited, where the issue before the Supreme Court was multifarious. I won't get into each and every aspect, but for the time being, restrict myself to just saying that what is required on the part of the assessee is to make a disclosure of primary facts. He is not required to disclose secondary facts. What conclusions an assessing officer will draw from the primary facts is entirely his discretion. So if he has not come to a conclusion that there is an escapement of income, you cannot say there is a failure on the part of the SC to make a full and true disclosure, so long as primary facts are disclosed. So when we say failure on the part of the SC to make a full and true disclosure, the failure should be of primary facts, not of secondary facts. In fact, NDTV is a decision which is of great interest because various questions arose. One of the questions that arose was, can an assessment of a subsequent year be used as a tool to understand or as a tool to say that there is reason to believe in some other year that there is escapement of income? Can that constitute tangible material? The Supreme Court said yes. Two, the fact that an assessment order is written in a very detailed fashion, does it prohibit the assessing officer from reopening the assessment? The answer was no. And lastly, in that case, interestingly, before the Delhi High Court and the Supreme Court, the revenue took a plea saying that even assuming I don't get the extended period of 6 years, because there is no failure on the part of the SC to make a full and true disclosure, I still get the extended period of 16 years because this is represented by assets located outside. The income is represented by assets located outside. The Supreme Court said that you have not stated so in your reasons. Therefore, this reopening notice cannot survive. Of course, they gave liberty to the department to issue fresh notice if they so desire, after invoking the extended period of 16 years. Now, one thing we see from the decision of the Supreme Court in NDTV is that it is very crucial that every aspect relating to reopening is justified on the basis of the reasons. Because the Supreme Court said you cannot come back and support your reasons on any other basis except on the basis recorded. In the decision of the Supreme Court in NDTV, the Supreme Court held that you cannot justify your reopening on any other basis except on the basis of the reasons that are recorded in writing. So that leads us to various other questions. Should the assessing officer state in the reason that there is a failure on the part of the SC to make a full and true disclosure? And what is the failure on the part of the SC to make a full and true disclosure? In fact, I have seen a number of reopening notices where they have said from the tax audit report filed with the return, it is found that if the reopening is beyond 4 years and where the original assessment was completed under 143 say, and if you are going to say from the tax audit report filed in the Form 3 CD it is found, that means you have not established any failure on my part to make a full and true disclosure. So you are going only on the basis of my tax audit report, which I have already filed. So the courts have again been consistent in saying that the failure on the part of the SC must be there. The burden is on the revenue. The revenue authorities must, in the reasons recorded, clearly state that there is a failure on the part of the SC to make a full and true disclosure, and not stop there. They must also, in the reasons, record what is the failure on the part of the SC to make a full and true disclosure. What is the failure on the part of the assessing officer? SC to make a full and true disclosure should flow from the reasons itself. Now, before I go to the next aspect on reopening, I think I will deal with one particular decision of the Delhi High Court, which has been affirmed by the Supreme Court by dismissal of an SL. It is a case called Honda CL. It is a case called Honda CL. In fact, to my mind, this is a decision where we need to be extremely careful in, it needs to be read with extreme care as to what is the meaning of failure on the part of the SC to make a full and true disclosure. I'll briefly state the facts. I'm going to trouble you with a little bit of dates. A little bit of dates, because that will be crucial for us to understand the issue in hand. Now, what happened here was that the assessment was with reference to assessment year 2000-2001, where a return of income was required to be filed before November 2000. and the return came to be filed by the SSC on 30th November 2000. Note this very carefully. Return for 2000-2001 assessment year filed on 30th November 2000. The Finance Bill 2001 presented in the Parliament on 28th February 2001. Presented on 28th February 2001, that is 3 months after I filed the return, sought to insert a new provision, section 14A, where they said expenditure in relation to exempt income will not be allowed. So you will understand, please understand, that 14A was retrospective in operation. Of course, they said that no assessment will be reopened on the basis of 14A. But if an assessment is already pending, 14A can be used even for a retrospective year or an earlier year prior to 2000-2001 also. Right. Now, what happened in this case? The assessment was already in progress on the date on which the budget was presented, the finance bill was presented. On 7/3/2003, that is about 7 days and 2 years and 7 days after the budget or the finance bill 2001 was presented, the 143(3) order came to be passed with no disallowance under 14. Later on, the revenue sought to reopen this assessment on the basis that 14A disallowance was not made. This was challenged on 2 counts. A, the express provisions in 14A which said that we will not use this to reopen an assessment. That was negatived by the Delhi High Court, saying that even in the course of assessment it ought to have been done. It has failed to be done even in the course of assessment. It was framed after the Finance Act 2001 came into force. Finance Act 2001 would have come into force sometime in May 2001. Therefore, they negatived that contention. The second contention was even more important. The SEC contended that there was no failure on the part of the SEC to make a full and true disclosure, because on the day on which he filed the return of income, section 14A was not even in contemplation, because the Finance Bill 2001 inserted 14A, which came after my return, 3 months after my return was filed. Therefore, in my return, I could not have contemplated 14A, so there was no failure on my part to make a full and true disclosure. This is something we need to be very careful about. The Delhi High Court negated this contention also and held that failure to make a full and true disclosure does not mean failure only in the return. The assessment happened much later in 2003. So in that period, you could have given the information in the course of assessment. You had not done so, so there was a failure on your part to make a full and true disclosure. Now, how is this significant? This is significant because the assessing officer cannot allege failure on my part to make a full and true disclosure so long as I show it at any time before the completion of assessment. Right? Based on this decision. The next aspect in relation to reopening is with regard to what we call a change of opinion. You have a decision of the Supreme Court in Rajesh Javeri stockbrokers, where the Supreme Court had held that if a proceedings have been concluded only under 143(1), then no opinion is formed, and therefore the question of change of opinion will not arise. There is also the decision of the Supreme Court in Kelvinator of India, affirming the full bench of the Delhi High Court in Kelvinator of India. Affirming the full bench of the Delhi High Court in Kelvinator of India, where the issue before Supreme Court was whether a reopening can be done on the basis of change of opinion. Please note that there was no express provision to prohibit an assessing officer to reopen an assessment under law on the basis of a change of opinion. But the Supreme Court held that change of opinion is to be read into the provisions of the Act. So if a reopening is done merely on the basis of a change of opinion, then the reopening itself is invalid. In fact, remember that the concept of change of opinion will apply to whichever time frame the assessing officer is going to exercise for reopening, even within 4 years. In fact, if one were to read paragraph 4 of the decision of the Supreme Court or the Delhi High Court in Culminator of India, one will see that the reopening happened within 2 years from the end of the relevant assessment. Even then, the Delhi High Court, affirmed by Supreme Court, held that the reopening was invalid. So, change of opinion is applicable even within 4 years. Only the full and true disclosure is applicable beyond the 4 years. This is another aspect that one may value. Now, we were discussing about various aspects, and when we were discussing various aspects, we said it is necessary that a sanction must be obtained wherever required by law for issuance of a reopening notice. Now, please note very carefully that these are equally significant, with probably modifications even under the amended law. Right? Now, the law requires a sanction from a higher authority. What is that sanction? Now, the courts have consistently taken different views on this matter in different cases. But the law that has evolved, which has been affirmed after the Supreme Court in a case called S. Goenka Lime and Chemical Limited, where the issue before Supreme Court was what should be that nature of sanction that is given. In fact, in that case, what the sanctioning authority wrote was, yes, I am satisfied. He wrote, yes, I am satisfied. Now, the question was whether merely stating yes, I am satisfied amounts to a sanction or otherwise. The Supreme Court said the word yes, I am satisfied does not, yes, I am satisfied that it is sufficient, does not indicate application of mind on the part of the sanctioning authority. The sanctioning authority should state in his satisfaction why he arrived at that satisfaction, why he is satisfied. Merely stating I am satisfied is not enough. Is what the Supreme Court has held. In fact, there are decisions of various high courts as well. In fact, the classic decision is the decision of the Delhi High Court in Yum Restaurant Asia Private Limited, where the Delhi High Court also took or followed the view that has been expressed by the Supreme Court. So we have been discussing different aspects. We have been discussing about reason to believe. We have been discussing about income chargeable tax escaping assessment. We have been discussing about recording of satisfaction. We have been discussing about asking for reasons, the asking of the furnishing the reasons, filing objections, passing a speaking order. What is the effect of not passing speaking order? What is the effect of not giving objections? What is a change of opinion? What is a full and true disclosure? What happens if there is a change of opinion? What happens if there is a failure on the part of the SC to make a full and true disclosure? Who must demonstrate that there is a failure on the part of the SC to make a full and true disclosure, etc. We have been discussing. We have also discussed about the sanction. Now remember that the law in certain cases requires the sanction of the Joint Commissioner or Additional Commissioner, and in certain cases that of the Commissioner or the Principal Commissioner. Now there have been instances where the approval was required from Joint Commissioner, but approval or sanction was obtained from the Commissioner. Even then, the court held that even though the approval may have been granted by an authority higher in rank than the person from whom the approval should have been obtained, right? Even though it has been obtained from a person higher in rank, I'm sorry, there was some bit of a problem. My battery was running out. I just put it on charge. So even though it may be obtained from a person higher in rank, the assessment is still void, because if the law requires an approval should be obtained from Joint Commissioner or Additional Commissioner, it should be obtained from that authority a higher authority cannot issue the sanction. Now, the law requires reasons must exist for the reopening. Now, a question arises, what happens if reasons exist, but during the course of the reassessment, I find some other income also has escaped the system. I am the assessing officer. I have recorded satisfaction A for reopening the assessment. But during the course of assessment, I find that there is another reason B, C, D, etc., where also there is an escape. But those are not finding place in the reasons. Can I travel beyond? Now we have an interesting explanation to section 147, which provides, explanation 3, which provides that the assessing officer can travel beyond the reasons. But then what happens if the reasons itself fail? I have recorded a reason A, but that reason A fails, but I have found B, C, D, etc., where genuinely there is an escapement of income. Can I travel to B, C, and D? We have a series of decisions starting from the decision of the Bombay High Court in Jet Airways, the decision of the Rajasthan High Court in Sriram Singh, the decision of the Rajasthan High Court again in Devendra Gupta, and the decision of Madras High Court in Martech Peripheral, where they have held that if the reason fails, the reopening fails. That means if the reason survives, you can travel beyond. But if the reason itself fails, the reopening itself. But you also have a contrary decision of the Karnataka High Court in a case called N. Govindaraju, where the Karnataka High Court has held that even though the reason fails, the assessing officer can travel beyond the reasons and still the reassessment is not involved. With great respect, I should submit that in my personal view, the Madras High Court, the Delhi High Court, or the Bombay High Court, and all of them seem to be the better view, because otherwise what can happen is the assessing officer may record a completely bad reason and then start a fishing and roving inquiry, find out something else that has escaped assessment, and then proceed on that basis. That will be giving him a free rope by recording even reasons which are otherwise not so valid in law. So I would think the decisions of the Bombay High Court, the Delhi High Court, the Madras High Court, and the Rajasthan High Court are a better view. But friends, there is a conflicting decision of the Karnataka High Court in a case called N. Govindaraju. There is this decision of the Madras High Court in a case called N. Govindaraju, where they have held that reopening can be done, and the reopening is valid even if the reasons fail. Most of the other high courts are in favor of this. Now, we were discussing earlier, friends, about a change of opinion. I just briefly touch on change of opinion before I proceed further. Now, what happens, because one of the things that we regularly see is reopening being done on the basis of what we understand as audit objections. What we understand as audit objections. There are two aspects in this. One, the reopening is done on the basis of an audit objection. Does that itself invalidate this? To my answer, the answer is no. To my view, the answer is no. Now we have to examine whether the audit party is pointing out a mistake in fact or a mistake in law. If the audit party is pointing out a mistake in fact, then it does not amount to a change of opinion. But if he is pointing out to a mistake of law, as coming by, in which the audit party understanding has been committed by the assessing officer, and the assessing officer has already taken a particular view of the matter, then it is amounting to a change of opinion. In fact, we have two classic decisions in this regard. One, the decision of Supreme Court in a case called PVS BDs, and the other, a decision of Supreme Court in Lucas. If you go to the decision of the Supreme Court in PVS BDs, you will see that the issue was that the assessing officer allowed ATG deduction. The audit party pointed out that the ATG that was given, the recognition that was given to the trust, had already expired, and hence the donation was not qualifying for ATG. The Supreme Court held this is a mistake of fact that has been committed by the assessing officer. Therefore, the information that came from the audit party can be used to reopen. Whereas in Lucas PVS, what happened was the SIRC claimed a deduction under section 35 in respect of building which was in construction during construction period, and also of the construction that was completed. The audit party was of the view that the deduction can be allowed only in respect of the cost incurred in the year when the completion was done, not of the earlier years when the completion was in progress, when the construction was in progress. The Supreme Court said no, this is a legal interpretation. The assessing officer has taken a particular view, therefore it will amount to a change of opinion. In fact, there is this classic decision of the Madras High Court in a case called Bayer Shoes. Very interesting decision, where what happened was the assessing officer had already completed the assessment under 143.3 and sought to reopen it under 147 by issuance of notice under 148 based on a Supreme Court decision. Because according to him, the Supreme Court lays down the law for all times. He's perfectly justified in saying the Supreme Court lays down the law for all times. But then the Madras High Court said, you have already formed an opinion. That opinion may be wrong, but you have formed an opinion. If you are going to take a different view of that matter, even though this opinion may be the correct opinion, still it is amounting to change of opinion, and therefore you cannot make a reopening on that basis. I will probably take us through just one more aspect under the existing or the old provisions before I go to the amendments that are made, and tell you what is the contradistinction between the present law and the amendments that have been made by the recent finance acts in relation to reopening of an assessment. Now, can a reopening be done and can it result in a benefit to the assessment? You have two classic decisions of the Supreme Court, one in a case called Sun Engineering and the other in a case called Chettinad Corporation, where if you prima facie read these, one tends to come to the conclusion that a reopening cannot result in a benefit to the assessment. But interestingly, you have a very nice decision of the Karnataka High Court in a case called Karnataka State Cooperative Apex Bank, where they distinguished Sun Engineering and Chettinad Corporation, saying these were not rendered under the present law, and saying that under the present law, a reopening can end with a benefit to the assessee also. So one may note this point. So if an assessment is reopened, and if you find that there is a claim that you have failed to make in the original assessment, you could stake your claim even in the reopened assessment. Now broadly, I will stop here on the old provisions relating to reopening and quickly run ourselves through the amended provisions. Now, the amended provisions have a completely different procedure. What is that procedure? I will first state broadly the procedure and then tell you what are the variations contemplated by the amended provisions. First, the assessing officer, it says the assessing officer should have information which suggests that income chargeable to tax has escaped assessment. Now, look at this in contradistinction to the old provisions. There it said the AO should have reason to believe that income has escaped assessment. Here it says he should have information which suggests. It does not talk about reason to believe. It only says talks of suggestive. So a mere suggestion that income has escaped is enough for him to reopen the assessment is what one would understand. And two, it does not talk about recording his satisfaction in writing. I'll come back to this aspect. Next, it says the assessing officer may, wherever he considers it expedient, conduct an inquiry on the basis of the information. If he considers it expedient, he can conduct the inquiry. He can proceed even without the inquiry. But if he wishes to conduct an inquiry, it should be with the prior approval of the designated authority. It should be with the prior approval of the designated authority. 3, the AO should provide an opportunity of being heard to the assessee with the prior approval of the designated authority by serving a notice to show cause why notice under 148 should not be issued based on information available, and grant the assessee not less than 7 days but up to 30 days to respond to the notice. This time can also be extended by the assessing officer on an application made by the assessee. So what he should do is, after he has the information to suggest that there is escapement of income, he must either conduct an inquiry with the prior approval of the principal commissioner or the commissioner, who is the designated authority, or alternatively, he can straight away proceed to issue a 148, but in either case, whether he makes an inquiry or not, he must again, before issuing a show cause notice for issuance of 148, take the prior approval of the principal commissioner or the commissioner. Thereafter, he must give me time of 7 days to 30 days, which is extendable. Take my objections on record. Then he must be satisfied that there is an escapement of income. And once he is satisfied, after considering my reply, decide on the basis of the material available on record and the reply of the assessee, he must pass an order. He just need not be satisfied. He must pass an order with the prior approval of the designated authority, that is the principal commissioner or the commissioner, that the case is a fit case for issuance of notice under 148, and thereafter proceed to issue the notice under 148, and the time limit granted to pass the order is 1 month from the end of the month in which the reply is received by the assessing officer from the assessee. Right? So if it is a fit case, he can issue notice under 148. Otherwise, he has to drop the proceedings. But remember that there are different approvals contemplated. A, if he wants to make an investigation, he needs a sanction. B, if he wants to issue a show cause notice, he needs a sanction. C, to finalize the show cause notice and to pass an order finalizing the show cause notice, he needs a sanction. All of these are from the designated authority. Of course, there are some exceptions to the rule, which I will come to. Now, what is the requirement of law? The requirement of law, if one sees the provisions of section 140A7, it is very interesting. It says that the reopening can be made subject to the provisions of 148 to 153. And if you go to section 148, it says subject to the provisions of 148A. What we were discussing as a procedure a little earlier is what is contemplated by 148A. So one cannot normally go beyond the procedure contemplated under 148A for issuance of notice. Remember that this is applicable only with effect from 1/4/2021. Prior to 1/4/2021, there was no requirement to follow the new procedure. The new procedure is applicable only with effect from the amendments that are made by the Finance Act 2021. By the Finance Act 2021 with effect from 1/4/2021. So if a notice is to be issued after this date, there's something more I will add, which I will come back to, because you remember that these are pandemic periods where there is extension in times, etc. So I will deal with that extension in time in a minute. But before we go further, there are certain circumstances where they say that there is, in every case, there is an approval that is required. But what is the circumstances in which one can say that the assessing officer has information which suggests that income chargeable to tax has escaped assessment? Now, what are these? It says any information, I am reading from the Act for the sake of convenience, you'll bear with me. It says any information flagged in the case of the assessee, remember, flagged in the case of the assessee for the relevant assessment year, in accordance with the risk management strategy formulated by the board from time to time. This is the first circumstance. Second, any final objection raised by the Comptroller and Auditor General of India, that is the CAG, to the effect that the assessment in the case of the SSC for the relevant assessment year has not been made in accordance with the provisions of this Act. So, two circumstances. A, information flagged in the case of the SSC for the relevant assessment year in accordance with the risk management strategy formulated by the board from time to time. And two, any objection raised by the CAG to the effect that the assessment in the case of the SSC for the relevant assessment year has not been made in accordance with the provisions of the Act, but it says any final objection raised by the CAG. Right? Now, please note very carefully. It says any information flagged in the case of the SSC for the relevant assessment year in accordance with the risk management strategy formulated by the board. We still don't have the risk management strategy formulated by the board. So that's something we cannot discuss for the time being. But it says the information should be flagged in the case of the SSC. So general information is of no avail. It should be flagged in the case of the SSC. Only then the assessing officer can be said to have reason or can be said to have suggestive information that income has escaped assessment. Please note the language used is which suggests that income chargeable to tax has escaped assessment means. That means it is exhaustive. The assessing officer cannot travel beyond this at all. So the information must be flagged in the case of the SSC for the relevant assessment year. And it should be formulated by the board from time to time. So if third party information comes from other parts of the department, unless it is flagged by the risk management strategy formulated by the board, that cannot be a basis for reopening at all. And B, it says any final objection raised by the CAG that the assessment has been made has not been made in accordance with law. Now this leads me to a very peculiar question first. It says in the final objection raised by the CAG that the assessment in the case of the SSC for the relevant assessment year has not been made in accordance with the provisions of the Act. Now, what if no assessment has been made? In my understanding, normally if an assessment has not at all been made, then one cannot say that the assessment is not made in accordance with law. Therefore, even if there is an audit objection, I do not know whether that is possible, but if there were an audit objection which does not relate to a case where an assessment has already been framed, then this clause cannot be of any avail to the revenue. And further it goes on to say any final objection raised by the CAG. It does not simply say an objection raised by the CAG, it says any final objection raised by the CAG. Now please remember that every objection raised by the CAG does not reach finality. In fact, there is an interesting instruction, it is available on the net, an interesting instruction of the board in instruction number 7 of 2017, instruction number 7 of 2017, which talks of the standard operating procedure for audit objections. Very broadly, it is like this. If there is an audit objection, the CAG will report this to the AO. If the AO agrees that there is a mistake in his assessment, then he can agree with that, then the audit objection reaches finality. But if he does not agree with that, he writes back to the assessing office, to the audit party, that he is right and the audit party is wrong in their view. If the audit party agrees, no problem, proceedings, the audit objection will be dropped. But if he does not agree, he goes to a higher authority and reports to the joint commissioner, the principal commissioner, that there is an audit objection. The principal commissioner then agrees, no problem, objection reaches finality. If he does not reach finality, then he does not agree. He writes back to the audit party. The audit party again writes back agreeing or disagreeing. If they agree, no problem. They drop the proceeding. If they don't agree, then it goes to the main CAG, and the CAG agrees, he drops. If he does not agree, he communicates that to the board. The board and the CAG sit down and decide whether or not the objection is valid. If they agree that it is valid, then the audit objection reaches finality. I really don't know whether all this will happen within the time frames that are contemplated by law. I shall come to the time frames in a minute. But then remember that only a final objection is going to be a basis for reopening. A mere objection of the CAG is not sufficient. Now, in the background of this, what we have read for the time being, we need to look at whether the old concepts of change of opinion, failure to make a full and true disclosure, etc. apply. As far as failure to make full and true disclosure is concerned, it is no longer applicable. I can say that in straight and candid terms because there is no such language in the present law. What about the change of opinion? Change of opinion, remember friends, was not something which is expressly provided for even under the law as it stood before the amendment. It was a judge-made law for the first time, explained in detail by the Supreme Court in Telvinet of India. So that was judge-made law. Whether that will apply, I'm afraid even there might be a difficulty in the sense that change of opinion may not apply because the law contemplates that if an audit objection reaches finality, then automatically reopening can be or there can be a suggestion that income has escaped us. The reopening can start. The procedure can start. So whether change of opinion will still be good, I am not sure. But my personal view is that I am tempted to think that the concept of change of opinion may not apply under the amended law. Now, keeping this in the background for a few minutes, there are other aspects. What is the time limit for issuance of notice? What is the time limit for issuance of a notice? Now, normally, the time limit is 3 years from the end of the relevant assessment year. When the AO has information which suggests that income chargeable to tax has escaped assessment. When do you say that income chargeable to tax has escaped assessment, or when do you say that the AO has information which suggests that income chargeable to tax has escaped assessment? Right? When do you say so? We just discussed where we said that if two circumstances exist. Now, how many years can it reopen? Normally, the reopening can be done only for a period of 3 years from the end of the relevant assessment year. Now, remember, friends, that with effect from 1/4/2021, if a search is initiated on or after 1/4/2021, the provisions of 153A no longer have application. That means the procedure for search will not apply as contemplated by 153A to D. But instead, assessments will be reopened. So even if there is a search or a requisition or a survey on after 1/4/2021, assessment has to be reopened only. And it can again be reopened for 3 years. But only difference is the AO is deemed to have information which suggests that income chargeable to tax has escaped. He needs still the approval of the principal commissioner, the commissioner, the principal director or the director. Oh, I think that is okay. That is okay. I'm sorry for the disturbance. But then, so I said that up to 3 years from the end of the relevant assessment year, if the AO has information which suggests that income has escaped assessment. But if it is a case of a search, a survey, or requisition that happened on or after 1/4/2021, then there is a deemed information that suggests that income has escaped assessment. Please remember, that the approval is required, the procedure that is contemplated by 148A is all required, except that the explanation to 148A which says when there is a suggestion on the basis of information that income escape assessment will not apply. Right? Likewise, in case where the person is not the person searched but a connected person, then also there is 3 years from the end of the relevant assessment year which is required for reopening the assessment. Beyond that, he cannot normally travel, provided he is satisfied that money, bullion, jewelry, etc., or books of accounts or documents belong to the third person. Again, for this, the approvals are required as contemplated by law. Now, there is one more interesting amendment that is made where they say that a reopening can be done beyond 3 years and up to 10 years from the end of the relevant assessment. When can it travel? Beyond 3 years and up to 10 years from the end of the relevant assessment. It can travel beyond 3 years and up to 10 years from the end of the relevant assessment year, provided the assessing officer has in his possession books of account or other documents or evidence which reveal that income chargeable to tax represented in the form of asset which is likely to escape assessment is rupees 50 lakhs or more for that year. I repeat, the AO has in his possession books of account or documents or evidence which reveal that income chargeable to tax represented in the form of asset which has escaped assessment amounts to or is likely to amount to rupees 50 lakhs or more in that year. Now, before I proceed to explain this, for beyond 3 years and up to 10 years from end of relevant assessment year, the reopening can be done normally only with the approval of the Principal Chief Commissioner or the Principal Director of the Director General of Income Tax. But if there is no Principal CC or Principal DGIT, then it can be done with the prior approval of CCIT or DGIT. Earlier we saw that the sanction was to be given by the Commissioner or the Principal Commissioner. Here it is the Chief Commissioner which we are talking about, or the Principal. And they are not, they don't have concurrent powers, in the sense that if there is no Principal Commissioner, only then you can get the approval of the Chief Commissioner. Now, you saw under the old law, up to 4 years to 6 years from the end of the relevant assessment year, beyond 6 and up to 16 years was there. And when they could travel beyond 4 years and up to 16 years was when the income was represented by a foreign asset. And you also saw that in the old 153A, they could reopen the earlier years which we discussed elaborately if the income escaping assessment for those years in the aggregate exceeded 50 lakhs or was 50 lakhs or more. Whereas here you will see it says is likely to amount to rupees 50 lakhs or more for that year. So if you want to travel to year 4, 5, 6 beyond the end of the relevant assessment year, for each year which you want to reopen, you have to see is the income that is likely to said to have escaped assessment is 50 lakhs or more. Yes, you can reopen. No, you cannot. So, for example, 3 years, yes, I am traveling, no problem. I want to go to 4 years from preceding the end of the assessment year. 4 years preceding, I want to go. I will see income escaping assessment is only 47 lakhs. I can't reopen. Go to the earlier year, 5th year, 52 lakhs. I can reopen the 5th year. Go to the earlier year. Examine year on year. Now, the 50 lakh limit that is contemplated under the amended provisions is on a year-to-year basis. A. B, it says the AO has in his possession books of account or other documents or evidence that reveal that income chargeable to tax has escaped. So, it is not enough if he has information which suggests the information should come out of books in his possession or documents or evidence which reveal income chargeable to tax escape. Please remember that here you don't have to go by the explanation to 147, which talks of 2 things. One, information flagged by the board, and 2, final audit objection. Here, the information should come out of books of accounts, documents, or evidence that reveal that income has escaped assessment. And more importantly, it says it should be represented in the form of an asset. So merely 50 lakhs is not enough. Merely having books or evidence is not enough, but it should be represented in the form of an asset. For example, if there is an unexplained expenditure, I have conducted my daughter's marriage 7 years back. I have incurred some expenditure which is unaccounted, which exceeds 50 lakhs. Can the SING of the reopen? No. Because that is an expenditure. It is not represented in the form of an asset. Now, these are just some of the points that we need to discuss. Right? Now, in the context of reopening, please note that it says that you can travel beyond 3 years only if you are in possession of books of account, documents, or other evidence. Now, in my understanding, normally an officer will come into possession of books of accounts, documents, or evidence only normally in the case of a search, a requisition, or a survey. Otherwise, he may not have such documents, evidence, or any books of account in his possession. Of course, one can always say that books may come into his possession even in the course of a scrutiny assessment, where you might have given him the books, particularly in the context of faceless, where you give him soft copy of the books, he can use those books also. Now, larger questions will arise for which we may have to look and wait for answers, but then very simply putting it, what about, as I said, this beyond 3 years will normally happen mostly only in search or survey cases. What if it is based on a statement recorded from somebody? Can that be said to be evidence? Because it says books of accounts, documents, or other evidence. Can that be called evidence? In my view, evidence means a piece of material that is gathered which points to an escapement of income. A statement by itself cannot be an evidence. Statements have to be supported by something tangible for it to become evidence. Therefore, there is no scope for saying that the statement itself is the evidence. Now, in this light, one more important aspect that has to be borne in mind. I'm talking this from the practical perspective. Remember, friends, that there are various sanctions required at various stages. And we discussed earlier that under the old law, the courts have held that if the sanction is without application of mind, then the assessment itself is void. So what we have done in each and every case is, even when we ask for the reasons, we ask for a copy of the sanctions. So even under the amended law, it is imperative that we ask for the sanctions that have been accorded by the higher authorities, so that we can see whether at every stage there has been application of mind. I already explained that there are sanctions required at various stages. There are sanctions required at various stages for framing an assessment. Now, I will probably deal with one last aspect before I pause. In case the organizers permit questions to be taken, I will take questions. Otherwise, I will pause and leave it to the next speaker. The one last aspect is an aspect which has been troubling almost every single professional. I think almost everybody whom I have met has at least one or the other issue on this point. See, this is a pandemic period. The law, or the amended law, came into effect from 1/4/2021. However, because of the pandemic, there was this Taxation Law Relaxation Act, where the time limits could be extended by a notification. Now, by virtue of various notifications, the time limit for issue of notice got extended in cases where it was expiring on 31/3/2021 to 36/2021. Where it was expiring on 31/3/2021 got extended to 36/2021. Now, what happened? Every single assessing officer, to my knowledge, issued notice under 148 wherever in his opinion there was an escapement of income without complying with the procedure that is contemplated by 148A. Now 148A lays down a procedure. Excepting in search or survey cases, the procedure is like this. You must first have information which suggests that income has escaped assessment. Then you must do inquiry if you consider it necessary, but before making an inquiry, you need prior approval of the principal commissioner or the principal director of income tax. Or the commissioner of income tax, I'm sorry. Next, you issue me a show cause notice. You ask me to reply. I am supposed to reply. Based on the records and based on the reply, you will decide whether there is an escapement of income. If you conclude as an assessing officer that there is an escapement of income, you go and obtain the sanction of the principal commissioner or the commissioner of income tax for issuance of notice, and then issue the notice. Whereas under the old report 148, if you have reason to believe, you record your reasons, obtain a sanction for record for issuing notice in some cases even that was not required, and issue the notice. What they did was they followed the old procedure, because according to them, the Taxation Relaxation Act permitted extension in time, and extension had been granted up to 36 in cases where the notice was otherwise getting time barred on 31/3/2021. So according to them, they could issue notice under the old 148 following the old requirements of 148. Now friends, in my understanding, the Relaxation Act only permitted a relaxation of the time, not the procedure. So if it was otherwise not permissible under the new law, they could have still issued notice under the old law. Please remember, the old law permitted reopening. I'll put it very, very crudely. Old law permitted reopening for up to 6 years from end of land assessment year, whereas the new law permits only up to 3 years from the end of land assessment year in normal circumstances. So though I might have crossed the 3-year barrier, I can still issue reopening notice under the old law because of the relaxation that is available in time beyond 31/3. Even though it was getting time barred on 31/3, I could have issued notice beyond 31/3 as an assessing officer 2021. But I needed to have complied with the new procedure under 148A. This is my understanding. Unfortunately or fortunately, officers in the department have not complied with the new procedure and have issued notice under 148, not under the old procedure itself. In fact, this has been subject matter of writ petitions before various high courts, Allahabad High Court, Rajasthan High Court, Delhi High Court, and the Calcutta High Court have all held in favor of SSC, holding that the 148 notices in such cases are invalid if the new procedure has not been followed between 14 and 36. After 36, definitely new procedure has to be followed, no doubt. The Chhattisgarh High Court alone has held in favor of revenue, holding that the old procedure does not have to be followed. Friends, I'll pause here, but with one rider, we do not know what will happen on 1st February 2022, because there are rumors that amendments may be made to set right what has happened by issuance of notice without following the old procedure. That is speculation for the time being. We will see what happens on the 1st of February. I think I will stop here, friends, pausing here for some time. I will, before pausing, thank the organizers once again for giving me this opportunity to read and share some of my thoughts on the provisions relating to reassessment. Thank you very much for a very patient hearing. Thank you all.
Ma'am, over to you, ma'am, for vote of thanks.
Thank you very much, sir, for sparing your valuable time and enriching us by taking the practical aspects of reassessment and income tax. We once again, members of SIRC Council, wholeheartedly extend our gratitude for sharing your valuable inputs, sir. Thank you very much, sir. Now, it's time for us to enter into yet another session of today's conference, that is a 9 Metro conference of SIRC. Someone has rightly said, and I quote, it's not that we use technology, but we need technology. So it's quite evident in the past few years that the technology is ruling our lives. We cannot imagine a day without smartphones, laptops. And if we say instead of auditing as a profession is witnessing a major change the entire approach towards auditing. So many tools are used for reconciliations and data analysis. Excel, which is widely used by accounting professionals, and it's seeing itself. So you cannot make enough of it. Now, that can also be witnessing many other tools of data analytics. So it's in the hands. There is no end to education, as education includes knowledge of technology, and technology is evolving in a pace never seen before. So today, in this 9 Metro conference, we had all the cover sessions dedicated to all other topics, which is most sort of relevant to our profession. Now, this session is the last session, is most dedicated session for internal audit through technology using various tools. We have internal auditors who are years in the eyes of the management to work smartly and deliver better. Let me take this opportunity to introduce our speaker, Nikhil Thakkar, who is a leader with 14 years of experience in internal audit, SOX, risk management, and investigations. He has worked in diversified industries like KPMG, Vodafone Idea, and Honeywell. He is currently leading the internal audit and investigations team of Amdocs India. So without much further ado, let us welcome our renowned speaker, CA Nikhil Thakkar, to take over the session. Over to you, sir.
Thank you so much, ma'am. Am I audible?
You're audible.
Oh, great. Can we have the screen, please?
I have started, sir. Is my screen visible, sir?
Yeah, we can see. Thank you so much. So good evening, everyone. Welcome to this session. First of all, I would like to thank the SIRC for a warm welcome, as well as giving me this opportunity to share my thoughts and experiences with all of you. So without any further ado, like ma'am said, let's begin the session. So today's topic of discussion is internal audit through technology. We'll see what all options are there and what the way forward is as far as technology in audit is concerned. Over the last few years, if you see, the technology has started to evolve in all the organizations. It was only a matter of time before internal audit as a function was also expected to change itself with the changing technology. As internal auditors, we are often asked, what is the effect? Are internal audit departments effectively responding to emerging risks and technologies or not? And how can they play a key role in accelerating the firm's digital revolution? That's a question that has been asked quite often over the last few years. There was an interesting study which was conducted by KPMG along with Forbes, which asked more than 300 CFOs as well as audit committee chairmen on their views on this, and more than 90% of those respondents felt that internal audit function is currently not identifying and responding to emerging risks. The common theme was that internal audit needs to be more proactive in identifying and mitigating risks, not just assessing the controls which are already in place. And one of the challenges which was identified by those experts was that internal audit needs to use more technology, data, and analytics in their audit approach and methodology. PwC also conducted a very interesting study, and the theme was on how different internal audit departments approach the technological innovation. And there was a very nice categorization done by them, and I quote, it said that evolvers are trendsetters. They adopt to new technologies quickly and set the pace for the change within the industry. Then there are followers who are close behind. While they are slower to react to deliver results, they are keen to implement the winning strategies which they see elsewhere. And then at the last, there are observers, which are simply watching at the moment. They often have little to no time, little to no use of the technology in their departments. Just before the pandemic began, the followers and observers had comprised of approx 46% and 37% respectively, according to that study, which is almost 83%. Clearly, technology adoption was not, or rather is still in early stages or early beginnings across many teams, despite the numerous benefits of the cutting edge developments. But the question that arises is how is technology helping internal audit department deliver better services? Which are the options that are available for professionals like us, which are having the biggest impact? Today in this session, we'll try to answer some of those questions. Can we move to the next slide? Thanks. So today we are going to see on 4 specific options that are available to us as internal audit professionals. Some of them being data analytics, railway glasses, the dashboards, and RPA, robotic process automation. Let's start with data analytics to begin with. As the organizations were moving to more and more automation, what was needed, or a need was rather identified for internal audit to create a roadmap that will help the internal auditors to use data science and process automation and enable data-driven decision making and insight. The idea rather is here to use these abilities, to add rather and use these abilities so that it can bring substantial benefits to the way assurance is delivered. At the end of the day, what is expected of the internal audit department is to add value to the business and to add assurance to the you can stay on the previous slide. I'll let you know when we have to change the slide. Yeah, thanks. The previous one, next one, sorry.
One.
Yeah.
This one or this one, right?
Yeah, this one. This
okay.
one, yeah, thanks. I'll let you know when I have to change. So like I was saying, what is expected out of internal audit is to assure the management on the overall controls of the organization and to provide an assurance that the internal controls are working fine. Now, how does data analytics help in this? Using an effective data and analytics is and will shape the businesses in the future. Let's see why some of these audit function needs to invest time in these analytics so that we can make a difference across the audit life cycle. Now, like we were discussing about the objectives of the internal audit, what is one of the main objectives to the audit is to ensure that the operating effectiveness of the internal controls over all the activities of an organization. The management on their part are expecting assurance on the authenticity of the financial statements as well as efficiency of the operations of the firm. And internal audit obviously helps them to establish both. Let's see how does data analytics help us in achieving this particular objective of internal audit. We can move on to the next slide. Yeah. So as you can see, by using this data analytics, we can have the risk assessment carried out in a better way based on some of the anomalies or the trends that we usually identify when we are auditing or when we are working. Deviations in trends and behaviors can be defined while creating these analytics and can be detected using advanced analytics such as which include some of them like data visualization and statistical modeling. Another thing what it helps us is to test the entire data sets. There is no limitation on the volume or the size of the data that we can analyze, and we can run the most complex of data analytics within seconds or minutes to get the desired output. Some of the key performance indicators that we can design and develop and define, of course with applicable thresholds, can also give us as an independent function and assurance as well as to the management and early warning signs of any adverse events like frauds or any irregularities going on in the operations or in some of our businesses. So the increased fraud detection also helps us through ability to interrogate all data and to test segregation of duties. Also, last but not the least, it helps us in continuous risk assessment or continuous risk monitoring. Monitoring these controls or these analytics that we create can be built into dashboards, which can then be the basis of our continuous risk assessment, continuous auditing, as well as monitoring solutions, and can be used by the second line of defenses across the organization. Data analytics as a whole has proved to be a boon to the internal audit team ever since it has been introduced and it has been implemented across different industries. Data analytics can also provide the businesses with rapid and continuous insights on key processes and controls. Let's move on to the next slide. So how do we implement data analytics in our internal audit departments across different industries? So few steps that I would like to highlight, some of them being, first and foremost, we need to identify which are the processes or which are the controls in which we can automate the execution or automate the auditing of those controls. We have different processes in our organization like procurement, sales, fixed assets, inventory, travel and expense, and so on. So we need to identify which are the controls or sub processes which we cover in our audit scope across all of these processes, which can be automated, and steps can be designed in an IT kind of an environment wherein we create those analytics and then we just need to run them. So first step is to identify them. Next is to identify or select a platform basis which you will design these analytics. Obviously, as we know, these cannot be done into Excel or any of the Microsoft platforms. So we need specialized softwares like there are available in the market, like we have IDEA, like in my organization, we use it on the ACL tool. So ACL is a platform on which we've created these analytics, wherein we have designed, first identified, designed, tested, and then implemented in the organization. And also we need to be careful that these platforms needs to be compatible with our ERPs, because the data will be used directly from the backend and we won't have to insert anything other than few basic details. Next would be to identify the periodicity to run these data analytics. When we run any analytics on platforms like IDEA or ACL, we just need to insert basic details like what is the period and what is the company code. In case there are multiple company codes or different regions that you're trying to analyze, we just need to insert those couple of items, and within minutes we have the response or we have the output with us. So it is important to also define at what periods do we want to run those data analytics. Do we want to do it every month or every quarter, every 6 months? Whenever we do the audit, we need to define and design that process as well. Next would be, once we've identified analytics, we've implemented them, we've run them as well as per our periodicity, then what to do when we get the result of those data analytics. Obviously, the next logical step in this is to analyze what are the exceptions that we've been given through that data analytic tool, and what was the reasons, or what are the reasons because of which some of the deviations occurred. So in the traditional approach, what we would have ideally done is, taken the data from SAP, did things in Excel, and then trying to identify the exceptions and then working on the exceptions, compared to the data analytics tool wherein we just need to key in basic details and we get all the outputs, all the results within minutes, and then that helps us save time as well as improve our accuracy and efficiency on the audits that we're performing. And once we've done all of this, once we've implemented this entire platform in our organization or in our company, that's when the journey starts towards the robust internal controls and a continuous risk assessment. Let's see some of the examples of data analytics. Move on to the next slide. So as we were seeing that, there are different processes in our organization, like we have inventory, procurement, sales, assets, travel and expense. I've tried to highlight here some of these analytics that we have designed in my organization. I think the total count is more than 50 plus analytics we've designed. We'll discuss some of the analytics here, which can be helpful or which have been helpful for us as an organization to use these analytics. Some of you might argue that all of these that you can see on your screen can be done on a manual basis also, which might be true in some instances, but the level of effort and the time that is consumed in doing these on a manual basis is much higher compared to what we get when we use these data analytics, not to mention about the added accuracy and assurance that we get when we run these through data analytics. To give an example, in inventory, when we were brainstorming on what kind of analytics we need to have or we need to design, we were looking at different options, and some of the thoughts came which we were successful to create those analytics in our organization. If you can see, the first one is frequent material verification discrepancy. So we started with an analytic which gives us a list of materials in which there have been frequent discrepancies identified. By discrepancies, I mean physical verification is carried out and then recorded in our ERP system. So it gives us a list of frequent such discrepancies in similar kind of materials over a period of time, let's say a quarter or a year or multiple years. Once that was done, then again, later on we started using it, more brainstorming happened, then we could edit it further and amend it to include some other aspects as well. For example, then we changed this to getting a list of materials for which there has been no receipt, no issue, no consumption, and still there was a physical variance identified. So again, we were able to edit and amend them as and how we started using these analytics. So that kind of helped us in achieving our audit goals in an efficient manner, in a better manner, and in much quicker manner as well. As you can see in some of the procurement to pay, the P2P process, also we have some of these analytics like early or late payments, splitting of POs, which used to take forever in the traditional way when you used to download it from our ERP system and then working out in Excel and then getting the stuff done. Now we just get it literally within minutes, the split POs. Then we have payments on holidays or weekends. Duplicate payments was a key analytic. So it was a combination of internal audit checks as well as some of a fraud risk that we wanted to cover, which we were able to convert into these data analytics, and we've been using them successfully since many years now. It can also be implemented in your support functions like travel and expense, wherein we can identify the anomalies or the trend settings or the trend variations, as well as duplicate expenses, if any, that have been claimed by the employees. Overall, what I feel is the data analytics is a tool to be used for the future, and it can help improve our audit quality at each stage of the audit process, leading to improved audit quality as a whole. Right from the time of planning the audit to testing to reporting, internal auditors can use the data analytics to better understand their work and collaborate with different stakeholders. Let's move on to the next slide. Real wear glasses. When COVID hit us somewhere around March 2020, it really made us rethink our audit strategy about conventional ways of doing audit. We had to innovate and identify different ways of doing audit. The core areas, as all of you will agree, can be done sitting at home, like which are linked to our ERP system. We can get the data from our ERP sitting at home and run or perform our audits into different processes and different functions. But the main challenge that came in when the pandemic hit us was the inventory process and the manufacturing process, and part of the fixed asset process as well. Obviously, for manufacturing or trading organizations, the inventory and manufacturing process is one of the key processes that is there, and management obviously expects assurance from the internal auditors that the process are working fine and the inventory is accurate, correct, and it is there what is appearing in the books. Now with the travel ban, we couldn't really do anything, and we obviously couldn't go on site and verify whether the inventory is there or not. If there are any discrepancies, what is the reason, why are the discrepancies, if there are any discrepancies in the first place. We are not able to review or audit all of those concerns that we would ideally have as internal auditors. And that obviously, as you know, is continuing for a long time, wherein offices are still not open and we are still not able to visit our factories and plants, whereas those have been operating right from the time of the pandemic start. So that was one of the main concerns that we had. And to be very honest with you all, we were in fact struggling for some time to identify a solution which would enable us to check or to verify this, as well as give us as an audit function and assurance on the inventory processes of the company, so that we can in turn give an assurance to our audit committee as well as to the management. So after much of deliberating, searching, and talking to our peers across different organizations, we came up with this device, I'll say, is which is called as RealWear HMT. HMT is head mounted tablets, which are some of the smart glasses that we use to conduct our audits in an effective manner. What these smart glasses do is these are connected with your Teams, like Skype, Microsoft Skype or Microsoft Teams. So these are connected with those communicating devices, and how we used it is we sent each of these devices across different plants in our company wherever we had an audit scheduled, and we trained those guys. So how it works is, you as an plant operator has to use this device and have to wear it here. We'll see the video also in a minute, but we have to wear it on our head and then roam around the factory or the shop floor or the go down or the warehouse wherever inventory is stored. And I, sitting at my home on my laptop connected through Microsoft Teams, can see that entire plant and entire operations, what kind of inventory is stored where. We can make them count, we can make them look at different manufacturing processes, fixed asset tags, inventory which is stored in different forms and different shapes across the entire factory floor. So these glasses enable us to see the factory floor and operations area live, which also includes shipping, receiving, manufacturing, and maintenance. So this kind of helps us understand the site layout and manufacturing processes better sitting at home, and allows us to complete our audit processes without compromising on the quality or without having to rely on the site operators or the plant operators at that respective location. Can we play the video, please?
Yes.
So you can see there's a camera on top of the ear through which we'll be able to see when we connect it with Teams. It also has voice operated controls wherein you can just speak to it and it will do those controls in-house. So the glasses view, as we saw. Yeah, so as we saw, this has really proved to be a technology game changer for us during the pandemic, as we replaced the physical in-person verification to avoid the risk of exposure to COVID-19, as well as to ensure that we are conducting our audit processes as per the expected standards and quality that we've set for ourselves. So that this really helped us, or rather is still helping us, as we are countering one wave after the other of the pandemic. Moving on to the next slide. Yeah. Next was, the Tableau dashboard. So what we identified, especially since the pandemic began, is that the businesses need real-time insight into some of the risks and changing conditions. Control environments obviously have changed with the remote working, staff shortages, different trading conditions, and increased cybersecurity risks. Some of these risks emerge from topics which are unforeseen, and the management can struggle anticipating some of these events. Like the pandemic was not foreseen by anyone, and no one knew that we would have to sit at home for 2 years and conduct our operations. So when data is available but not used in a prospective manner, it may fail to identify some of those emerging risks that are ideally expected by the internal audit team and the ERM team to identify. So today, if we see, friends, technology in audit need not be only used to identify gaps or errors or irregularities, especially when you perform the audit, but it is more from a value addition perspective to the management and to the leadership of the organization, by assisting them also in identifying some of those red flags or areas which needs improvement. In our organization, the audit team was tasked with a project or a program to ensure that we are identifying those red flags or those anomalies much in advance, rather than waiting for an audit to happen, especially in these scenarios wherein people are working from home and we don't have an effective control compared to how it would ideally be in normal circumstances. So that's when we came up with a process called CRA, continuous risk assessment, wherein we monitor key ratios and aspects of business performance which are critical to the business leaders to know proactively, almost on a live basis. So what happened is we had a discussion with our respective leaders across different processes and functions and businesses to understand what is their key challenges or key risks that they feel should be made, they should be made aware on an immediate basis rather than waiting for an audit to happen or a whistle to blow probably. So hence we came up with these ideas wherein we picked their brains and we came up with multiple dashboards which we created in Tableau, wherein we are using these dashboards to on a live basis tying up with our ERP systems and giving those key ratio indicators to our leadership as well as to our own audit function to help us identifying the key risk areas wherein we need to focus on, we need to improve, and we need to bring in those changes on a periodic basis. So what we do is once we've identified the areas which needs these dashboards, we created the same, and then we sort of run those on a periodic basis, and the output that we are getting, we are analyzing the same, identifying the red flags, and then communicating and sharing the same with the business leaders for them to take actions at their own end as well as to improve the internal control processes in the company. Let's see some of those examples on the next slide. Next slide, please. Yeah. So as you can see, some of these dashboards that we've created, on the left, there is an example of a keyword search. So this again is created using Tableau. As you can see, there are different parameters attached, different output that we've received. So what we did was we identified some key keywords which can be used in a purchase order or an invoice or any other document for that matter, or even a narration of a journal entry that is being passed and an accounting entry that is being passed. And some of those keywords are, I'm not sure if we can zoom this, but the list of words is available there. Some of those words include gift or licensing charges or any other such keywords which were identified through our fraud risk matrix that we identified, and these analytics run through our ERP systems at the back end and give us a list of all such words which were used either in a purchase order or an invoice or a narration of a journal entry or any other area for that matter. And we designed it in such a way that we get an output which shows us in which entity more and more such instances are happening, which region, which business, which period, and any other aspect that we would want at a particular point of time. It can, we can have that created and it can give us an output, which obviously helps us to identify that which is the area, like the geography or the business that we need to focus on. It also helps us understand the behavioral aspects of the employees, if at all they are if at all they are encouraging or they are involved in some anti-company activities, like for the time period or the geography or a specific type of word. So that really kind of helped us as well as the management to understand the employee behavior, to understand the areas of concern, to understand in fact where are the internal controls weak or probably need strengthening. So that really helped us in improving and working on some of those aspects. On the right, if you see, we have the T&E duplicates. Again, this is just an example, and we can create as many dashboards or as many applications as we want to give us an idea. So what we tried to do was to look at the trend of the expenses, as you can see on the bottom, on the top right side. What is the expense trend, which are the periods in which people are claiming some of those expenses, what kind of travel expenses are being claimed, hotels, incidentals, flights, and other aspects. We have employee-wise summary if we want, expense-wise summary, again company-wise summary, regional-wise summary, all of those different aspects we get, which we are actively using in our day-to-day continuous risk assessment methodology to help us as well as to help the business in identifying these red flags much in advance rather than waiting for an audit. Because I would not do a travel audit more than once a year or maybe once in 2 years for that matter, depending on the volume and the risk category in which we've identified or highlighted that audit. So the possibility of identifying some of these red flags previously was very low because we used to do it once a year or once in 2 years, versus now when we can just run these dashboards on Tableau and get some of these red flags highlighted or identified on an immediate basis so that we can attend to those and rectify and modify those immediately. Moving on. Next aspect to the technology changing that was a really big aspect or a really big game changer was RPA. RPA is robotic process automation, which we have implemented in SOX, IFC, as well as some of our audit operations that we are conducting. If you see, RPA was previously unheard of when it came to an organization as a whole. In fact, then slowly the organization started to implement the bots across different processes of our organization. I think the first time when I saw a bot being implemented in my company was somewhere around 2017, if I'm not wrong, wherein they were implementing a bot in one of the freight invoice recording processes, because we have a lot of freight going on. They had implemented a bot wherein it used to get the batch and then review it and with the rates that were agreed with the contractors, and then if all was okay, account for it in our ERP. If not, send it back to the contractor. So for me personally, that was very fascinating to see for the first time, wherein a robot was working on something that traditionally we've only seen humans do. So it was kind of an exciting prospect at that point of time, and I think that was just the beginning, and slowly it started to spread across different processes of the organization, wherein so much so that every department or every business was given a target of implementing the bots in their processes to improve again efficiency, because with bots you don't have to worry about their 9-to-5 shift or not working on holidays or anything for that sort as well. It also helps us increasing the efficiency and accuracy of the processes that we're doing. So obviously, since it started with the operational processes in the organization, it was only a matter of time before that thing came on to the internal audit department as well, wherein the question was then asked that how can we as internal auditors implement RPA in our function or in our department, and where would it be most suitable or most useful for us to implement some of those aspects in our function. Next slide, please. So as you see on the right side, let's see how the internal audit department has evolved from many years back. So 2005, 2010, I think it was more so manual, wherein all activities were being done on a manual basis, and we had not really heard or worked around automation. I remember during my articleship also, it was all pretty manual, and we used to sit with those large invoices or large printouts from local ERPs that some of those organizations were having. To slowly at a time wherein I think post 2015, the automation in these aspects or these area really improved a lot, wherein we started to have more and more options like your lean or Six Sigma or agile. I never honestly imagined a Six Sigma kind of a thing in internal audit, but it did get implemented. And now after a couple of years, we started to talk about data analytics and artificial intelligence and robotic process automation. And I'm sure in the next years to come, again, there will be change or evolving technologies that will come and we'll have to implement in the way we perform internal audit. So when it came to RPA, honestly, audit at that point of time was approaching a notable shift, wherein the expectation was to digitize as many processes as possible, which were obviously previously done on a manual basis, so that it will help accelerate the efficiency without sacrificing on the quality or the accuracy of our audit function. The scope that was the target that was given to us was to identify which are the routine or the mundane steps in our audit that we usually have to do on a repetitive basis across different points of time, wherein which can really be automated and implemented through a bot, and so that it frees up our time and we can focus that time and use that time and focus on other areas which are actually important and requires more attention. So again, the brainstorming process started, and first and foremost, we identified two aspects wherein we could implement these bots. One was obviously SOX, the Sarbanes-Oxley Act, and second was the IFC controls, which is nothing but India SOX, if you can put it that way. So we identified these two areas because every year we used to do the walkthrough, then we do the interim testing, then we do the update testing. So every year we had to do this activity, and the process, if you see, was pretty much the same. That we select a list. A list of control gets agreed to that we need to perform. Then we generate the data, we select the sample, we ask for evidences, we review the sample, testing those controls pass or fail, and then document, and then close it. That's how the entire cycle used to happen, and it was actually repetitive task wherein I could see some of the team members just using the previous year's documentation and using the same in the current year as well. So that's where I think the idea struck that we can use the RPF mechanism in our SOX as well as the IFC processes, so that we can save some of this time and use that time in a better way. Can we move on to the next slide? So some of the findings that we identified, in RPA, the problem statements which were there, that around 26% of the SOX or the IFC testing time was in manual data extraction from different systems, which were obviously subject to human errors, as well as heavy reliance on the stakeholders to obtain the data. In some instances, I had to rely on my stakeholders to give me the data. And once that was given, then I had to start my processes. That obviously used to take too much of my time. And then SOX testing obviously continues to expand over different aspects of different entities in case there are multiple entities that we have to deal with. So there was a need that was identified to an integrated data-driven audit. And I think that is where the RPA mechanism helped us in an effective way. So the idea was to create a bot to extract the SOX populations from multiple systems. Then we also tasked the bot to select the non-judgmental samples in a particular way, or in some cases wherein random sampling was required, we used random samples in those aspects. And obviously the bot was helping us to extract the data as well as selecting the samples. Then we used to share that samples with the stakeholders and getting the evidences to test and other aspects. So I think the value proposition, if you see in this specific aspect, it helped us to reduce the time which was spent on manual tasks and more time on the items which were actually of high risk and required our more attention. The rule-based RPA, if we created, definitely reduces human error, definitely increases the accuracy and efficiency of our functions. The documentation gets consistent. It's also scalable because RPA use cases for SOX could be used for some of our audits also. The same methodology can be used for some of our normal internal audits also, to select samples or to review some of those ledger scrutiny that we carry out. And that helped us to redeploy our audit resources for some of the other areas where we felt could add more value, and conduct some of the business assessments, which were estimated to around 2 or 3 audits additional we can do by saving this amount of time. It definitely helps us on optimizing the data extraction from different systems, applying the rules. Timing is something that we need to define. Like if we're doing interim testing and update testing, we can define those timelines like Jan to May or June to December, and then the bot selects those samples or those population between that period, and then gives us the output as per the inputs that we are feeding to those bots. And of course, it improves the overall efficiency and effectiveness of the entire RPA process, of the SOX and the IFC process. Next slide, please. So what was the roadmap that we followed in the entire implementing the RPA function of the process? We started with the discovery, wherein the idea was to identify areas which are repetitive in nature and which can be easily automated or can be done by a bot. So that was the first step. Then was to actually evaluate the possibility of having those implemented in a bot process, because it was a new area for all of us and we were not really sure about how can it work or if it can work. So then the next step was to sit with the IT team and to identify the different challenges that can come and how to overcome those challenges and how to best implement the idea that we plan to implement without compromising much on the challenges. So the evaluating part was a bit challenging to determine the viability for RPA and considering the ERP systems that we have and the other tools that we are using for different kinds of data. Once that was taken care of, then we obviously implemented the entire RPA function in our audit processes, beginning with SOX and IFC. Currently, we are evaluating the possibility of having those implemented in some of the other audit processes as well, the core audit processes. That's still under review. But yeah, we did implement that in our SOX and IFC parameters. And once that was done, I think the last part is the operational part of it, wherein it was implemented, I think, a couple of years back, and since then we've been using it really well. It is actually helping us in saving a lot of time and improving our efficiency and accuracy, and so much so that people have started using it more and more, and we are currently brainstorming on different aspects that we can implement RPA into internal audit further as well. So I think that again has been a really good evolution in internal audit as far as the technology is concerned. So friends, as we saw, these are some of my live experiences which I have personally used in all of my in my professional career so far, and I think all of that has been really helping us deliver better and help the management achieve its objectives in a better way. Obviously, it is challenging, it is evolving, it is ever evolving. We are still, identifying new things that are coming in, like we have blockchain, we have something else which is still coming on. So technology was not the same 10 years back, and it will definitely not be the same 10 years later as well. So the idea is to keep on evolving, keep on changing, and keep on keeping up to speed with the ever evolving demands of the management, the audit committee, as well as the overall environment. That was it from my side. In case there are any questions, happy to take.
Hello, any questions?
No, sir. Questions we didn't take for previous session also. If there is any,
So
we'll send it to more mails, sir. Yeah.
This was three sessions, some metro, sir. So we are not taking the queries. If there are any queries, I will forward it to you by mail. Please attend.
Sure.
Okay. Shall we conclude, Selva? Thank you very much.
Sir, we'll go with the vote of thanks, sir.
Okay. Members and esteemed speakers, very good evening to all of you. Today it was a very memorable day for more than one reasons. Because today we had all the stalwart speakers, and also to inaugurate the honorable member of the parliament and a woman empowerment leader, Kajimoli Karunanidhi madam, inaugurated the session. In absence, I wholeheartedly thank her, and also the first two speakers for the day, Jatin Christopher on GST, and Banusekar for the assessment procedures, and now Nikhil Thakkar for on internal audit online. With this, I wholeheartedly thank each one of the speakers, and also thank each one of the members who have participated, and but for your participation, it would not have been possible to make this function a success. In this pandemic also, we would have loved to be there physically, but because of this Omicron, we have made it possible online. And this metro conference is one of its kind every year conducted by SIRC. And I thank the chairman Jalpati for conceptualizing this program, and I thank Selvaraj and office for the support that they have given for this program. So thank you one and all. Again, Nikhilji, thank you very much for your time and presentation, and thank you all. Thank you very much.
Thank you so much, sir. Thank you.
Thank you, sir.